income is equal to the amount of value we provide. And I'm just saying 10,000 here as an example because I really want to break down what I was taught by the wealth planners that I have, the family office that I'm working with, and I want to just share that with you. Certainly not a financial planner, but some of these are very basic, but they should be implemented as soon as you can because it just makes a tremendous amount of sense. So starting out, usually what happens is we get this $10,000 check, right? We get it here and we're excited and we haven't quite put together our LLC, or maybe we have an LLC or we have our corporation and we just haven't set up our bank account yet. So it goes right into our personal account. And then what do we do once it gets into our personal account? All of a sudden, we start spending it all over the place, willy-nilly. We're excited. We got our first 5-figure check. Our mind is blown. A 5-figure check? Oh my gosh, I've never had this before. And we start going crazy. This is my experience. This is exactly what I did as soon as I got some money in. And I was like, oh my gosh, I've never had more than like $2,000 that I got for like graduation from college from my grandma in my account. And then all of a sudden you start getting these checks when you get into real estate and you kind of freak out a little bit. So let's put together a game plan so that you don't freak out about it and you're really, really, really smart about it. Okay. Because what I forgot about was I had a business partner. We all have a business partner. It's called the United States government. It's called the IRS. All right. And they need to get their payments as well. And we'll go through all of that. But this is what most people do. The check comes in, goes into our personal account, and then we go crazy. We start spending it on all sorts of things. Now, what the smart business person does, step up, goes, okay, wait. I've set up my LLC. I've set up my corporation. And by the way, guys, you can set up these, there's companies that help you set up your LLCs. You can also just talk to a CPA. You can talk to a CPA, say, I'm in the real estate business. Can you help me set up my company? A lot of CPAs will do that as an added service to help you file your taxes, and they know who you are and they're intimate in the way that you have everything set up. So that's what I've always done. I have worked with the guys out of Utah on a couple businesses, but for the most part, it's just set up by a CPA, right? And so the checks come in once you start rolling, not check anymore, checks, plural, start coming in on a consistent basis. And now you've set up your business account. You understand that it goes into your business account, right? You need to have a tax ID number to be able to open up a business account with the major banks. So what you do is you go to the Corporation Commission, you set up your company, you get your EIN number, which is your tax ID, you go into the bank and you set up an account. It's that easy, right? So you set up your business account and that's where your money goes into. Now, remember, you got this business partner. This is your biz partner. And this is just a little side note. If you actually have another biz partner, watch how this gets chopped up here, okay? Watch how it gets chopped up when you go, hey, let's split the deals 50-50. Let's do this type of thing. Let's be business partners. It's cool, but you're going to make 50% less. And when it really gets chopped up, you're going to understand. But from here, this is 33%. You're going to put 33% away for taxes. Okay, now you're going to have a bunch of write-offs. You're going to have a bunch of things that are going to be awesome because you are now a business owner. And that's a huge advantage for you. But the fact is, when the 10,000 comes in, boom, 3,300 off the bat is gone. Gone. It's into your tax account. Okay? Boom, it's done. Now, your business expenses are going to be another 33%. Right? There's going to be another $3,300 is typically going to go into your business expenses, right? This is going to start this is going to start building up your account for marketing efforts, your lead generation efforts, for maybe hiring a VA as an assistant or maybe an assistant that you have locally. This is for any kind of operations. Maybe you don't want to work at home. Maybe you want to go into like a co-working space type of thing. This is where your business expenses live. So that means you've got 33 here. You got 33 here. That means you got 34% for you. for you. Right? It's not, I made 10,000, bro. I made 10,000, put it in my personal account, we're rocking and rolling. No. You still have operations. You still have business costs. You still got all these things here. And you still got your business partner, which is the U.S. government. This is the rent that we pay to live in this country, right? And I know what you're saying, and we're going to get to it because this is a real estate show. I know all you beautiful real estate entrepreneurs are going, what about depreciation, Brent? I'm going to just buy a bunch of property. I'm going to depreciate. I don't have to pay this. Great strategy. Offering housing is a loophole for the government, but let's be real on what that looks like in just a second, okay? Either way, you need to start putting this away. And by the way, this goes up. This goes up the more money you make, right? The more money you make, you get into like the 42% tax bracket or higher, plus you got state taxes and all that. But remember this, for every $10,000, in your mind, you got to think of this. Every $10,000 I make, I get to keep $3,400. Once you realize that, it's like this. It's like this weird. It's like a weird sadness that I felt. It was like I had this big old ice cream cone, and like some stranger came and like ate 2/3 of it, and now I'm just like got the bottom third of the ice cream cone. You know what I mean? And that's an interesting thing to teach your kids. You want to teach your kids about taxes? Like, go eat 2/3 of their ice cream cone before they get it, and they'll learn real quick about taxes and business expenses. But that's it. I mean, you're looking at, you're going to be netting the $3,400 here, and then you go, okay, wait. Well, how do I pay off debts? How do I increase my lifestyle? How do I make sure that I hit my financial goals for the amount of money that I want to take home? How do I make sure that I'm doing all the things that I can to grow my wealth as well? Because I know that this business, wholesaling real estate, is going to get me rich. It's a cash machine. It's going to bring in opportunities and income, and it's absolutely incredible. But how do I make sure that that goes home to me and my family, and then also into my investment accounts? But this is what the amateur does, okay? This is what the young professional does here. This is kind of the world that we're living in here. And then here is the way that they structured it for me and my family, okay? This is the way that it was structured for us, all right? Checks come in, goes into the business account, sets it aside into the tax account. At this point now, it's really interesting. I'm actually W-2'd and the business owner, so it's a whole different thing. I like getting it set up so that when the money comes in, it's already been taxed. I don't even care, right? And it was a weird transition because I was always like, you know, taking in the money and then putting it aside and paying the taxes later. But I wanted to make it more streamlined because I hated it. I hated looking at a big account that had a bunch of money in it and knowing that it wasn't something that I could use, because it was owed to the IRS. It was owed to the government. But then we got the business expenses, right? We keep this in here. That's all the same. And then here's the interesting thing. It doesn't just go to like a personal account like it did before. Like a personal account, and I get the 34% and that type of thing. It goes into what I would consider an investor account. Okay, or what my family office considered an investor account. And then you determine lifestyle here. How much is my home expenses? Typically, my home expenses on a monthly basis is somewhere between 30 and 40K. And that's just living and adventuring and doing things that we want, and not checking prices at the grocery store and going on vacations and buying vacation homes and putting money into our properties and this type of thing, right? And I know that kind of goes into the real estate side, but with the cabin that I own and the house that I own, that's they're liabilities. Let's be honest. They cost me money every single month, but that's all kind of boiled into the home expenses, private schools, tutors, all that stuff, right? is the home expenses. And so I know, okay, it's about 30, 40,000 here. All right. And then from there, it goes into what am I saving for real estate investing? And real estate investing, I take this a couple different ways. One is actually buying properties. I think it is a smart long-term strategy. My philosophy, and the philosophy from the advisors that make way more than I do and manage way more funds than I could ever imagine, is never sell. Never sell, which is weird because we're wholesalers, and what we do is we flip it as quick as possible, but then we put it into something that we never flip, and it's kind of weird, right? It's kind of like, oh my gosh, I'm holding on to this asset for a really long time. But yeah, it's really interesting. So anyway, we put money into the real estate fund. We put a certain amount into the market or into Bitcoin. So this is that, and in Bitcoin is what they suggested when it was down at less than 20,000. Now it's up, and then it does what it does. But they want most of and this is the absolute truth. They want this to be like 65% of my investment portfolio in the market. They're saying business in America is going to do better than this long term in their experience. And this is they're going right off of like the Forbes wealthiest people and the way that they're managing their money. It's about 65% into the actual market, which is really interesting. Cash account here is usually about 50 to 100,000. That's just sitting there for whatever I want to do with it. If I need that for anything. And so that is the way that it is all set up. But none of this happens unless you have consistent checks at the very top. The earned income. This is earned income. And I'm in the highest tax bracket, so that plays a little bit. They do do some accelerated depreciation. But the interesting thing about accelerated depreciation is they get you like 20 years of depreciation in 1 year. But if you sell the property within that 20 years, you actually have to pay the government back if you sell it. So it's great. That's why they say in real estate, make sure that you buy the properties and don't sell it. Because if you're going to do advanced depreciation and get that tax benefit, which it's not much, if you really look at it, you have to understand with this, everybody in real estate is trying to avoid this. And I totally get it. I understand it. Again, it like hurts. It's like, oh gosh, in your bones, you feel it, right? Like you get like a check and it's already been taxed and you're like, oh my gosh, this is incredible. This is absolutely bananas, right? But you get owner draws and bonuses every quarter and you get those type of things and those get taxed as well. But the fact is to not pay anything in here, what they told me is you have to buy 8 times the amount of real estate value-wise, depreciate them all every single year than your income. So you make $1 million a year, you have to get 8 million. You have to pay for all those to do advanced depreciation. You got to hold them for at least 20 years. You're going to have to pay those back, and you got to manage it, and you got to get you got to get the loans for that, and all sorts of things, leverage on it. And so the wealth managers that I have, Do Wealth, DEW Wealth, they're awesome. Family office. They really watch the balance sheet. And that's something that most real estate entrepreneurs don't do. We're like, oh, it's good leverage. They don't think that. Really, really smart financial planners don't think that at all, because they have seen the market shift. They have seen things, people lose absolutely everything because of leverage. So they really keep the balance sheet something that's reasonable and won't sink the ship if something bad happens. If people stop paying rents, which happens, certainly happens, or if there's a major issue like a pandemic or something, right, where a lot of people didn't pay, people are in trouble. And I never want to be in that position for me and my family. So they say, put it in the market, buy some real estate. They still think it's a great long-term strategy. But remember with depreciation, and this is something really that we really have to understand, is when you depreciate, it's about 3.636% of the property. This is just normal depreciation over 27 and a half years. This isn't advanced accelerated depreciation. This is just average depreciation is 3.6. So you own a house. Let's say the average house is 300,000 across the United States of a rental. Let's keep it easy. Let's say that it's 100,000 in some of these rental markets. Okay, that means you can write off $3,636 from your tax liability a year. But that doesn't mean dollar for dollar, I don't pay $3,636. No, on my $100,000 rental. That means I get to depreciate my income by that much. So if I make $1 million, it only affects my tax basis. My tax basis goes down only by $3,636. Right? That's not like I just save this dollar for dollar. I save about in my tax brackets 42% of this. So whatever that is, that's half. I mean, I save $1,500 in taxes a year by buying $100,000 worth of property. I mean, do what you do. I mean, this is why, getting into, taking over some people's loans on a subject to, or doing wraps, or doing something creative, or raising a bunch of funds. Guys, stick around to the end of the show, because I have the master at building a portfolio and development and wholesale and all these things, Luke Rodvold, who was my acquisition manager back in 2013. Now, multimillionaire, doing amazing things, has an awesome plan. He's at the end of the show. After this, in about 12 minutes, we've got the incredible Tom Croll. Tom Croll's back, baby. He gave us his first 8 or 9, I think it was 8, really smart financial strategies and business strategies. He is the coach of the coaches. He is Coaching Inc. Everybody that you respect in this business has been coached by Tom. I'm telling you, you got to stick around for that. It's absolutely incredible. And then we're going to be talking about paying paper leads, PPL, which is really popular right now. We've got the owner, Andy, of propertyleads.com coming on, talking about how they find their leads, what markets are best for that, all of those things, all in today's show. Not only that, but we're going to be doing the Meathead moment, talking about the exercise that Raphael and I have been doing. We're going to weigh ourselves here, and we're going to be giving a ton of giveaways here at our balloon board here. We've got some awesome giveaways, so make sure that you stick around. But also, most importantly and selfishly for you, make sure that you put in questions into the comment section, especially about this stuff. Especially about this. I'll answer it the best that I can. I'll answer it based on my experience. I'm not a financial planner, nor would I ever claim to be. But I hire people to set this up for me. And I think it's really smart, because I think there's a lot of misinformation out there. And people get buried every single day in our business. I want you to just be like this. I want you to be building your business, finding great opportunities, flipping those for unbelievable profits, making sure that you're paying your business partner, the IRS, making sure that you're putting that money aside so that you're keeping that money for yourself and your family, and you're buying really great assets, and you don't get over your skis too fast, too hard with this type of stuff. Because home expenses, I can't tell you how many people that grew up with nothing except for that fire in their belly, and they always wanted that car, they always wanted that watch, they always wanted those shoes, they always wanted that outfit, they always wanted the big team, and they always wanted to be the boss and all these things, and it looks good. But I'm telling you, this stuff is so much better. This is the real. This is what wealthy people have, not just people that are on a hot streak right now. You can't get into the Hall of Fame by having one great season. You know what I'm saying? You get into the Hall of Fame by being consistent and making sure that you build a beautiful body of work. And that's what I want for you. I want you to make sure that you can go out there confidently, make the money, keep the money, invest the money, keep growing your business, keep growing your brand, keep growing keep growing your portfolio. That's another thing. Let me go on this tangent, okay? So you guys have all this. Matt, can you erase the back? Well, don't worry. I'll just erase this. So guys, remember this. As an entrepreneur, there's really 2 paths, and there might be more, but this is really the way that I simplify it in my mind, and you can maybe correct me and or agree with me. I'm open to both. but you have like two paths, right? As an entrepreneur, it kind of goes like this, right? You're like, okay, I want to work for myself. Thank you. Can people not see? No, it's just okay. You want to work for yourself. You want to build a business, right? This is you're building a biz. Remember this. One is going to be a cash machine, and this is going to give you checks and checks and checks and checks and checks, and this is just something that it's just going to run. It's just going to run for you, and it's going to bring in awesome income. And the other one is building something that has a exit where you get a huge check or a couple huge checks, right? Your wholesaling business is this. It is not this. It is not this big exit that you're going to sell your brand typically. Now, if you really put in a bunch of money into marketing, build a local brand, build something that people really recognize, people will do business with you just because of the brand, great. But for the most part, people are doing business with us because we're either reaching out to them or they're reaching out to us. It's transactional and it's quick and it's done, right? This, in my experience as a real estate entrepreneur, and this is just my opinion, building this is your portfolio. Imagine buying properties every single year, building up your portfolio every single year, getting the debt paid down by your tenants every single year, having a nest egg for when the market goes bananas and tenants don't want to pay you money, or you have to turn over the properties, or there's some vacancy. Keep it all in there. You're not living off of this. There's none of this, really. People talk about cash flow. That's a myth. You're not getting cash flow typically from your rental portfolio until you get it really paid down, until the debt's not there and the property is in really great shape. But there's always things going on with the property. That cash flow until you get it paid down is kind of a myth. Let's be honest. Once you build this thing up, though, you're not getting that every day. It's not paying for your lifestyle. It's not paying for that vacation. It's not paying for that month in Maui. You know what I'm saying? But you build that portfolio up, you own it 20, 25, 30 years, you let appreciation do what appreciation does, and you're going to have a bananas exit. Bananas. I mean, you could exit out of your portfolio for 10, 20, 30 million dollars if you're buying in the right places. If you're buying where, that's good school districts, appreciation is high. Mostly it's kind of the Sun Belt, to be honest, is my experience of where the biggest exits happen. But you build up that portfolio and you have that huge exit 20, 30 years from now. And I know that sounds, that's so long. Oh my gosh. Let me tell you what. I'm 42 now. At 22, I thought 40 was like the oldest thing ever. If I would have started really being smart and doing some of this when I was young and really putting it into assets and building something up at this point, I could be done at 50. I mean, I'm going to be done at 50, but that's because of business, not because of my portfolio. But a big exit, I mean, if you're even now, if you have it, let's say that you're 40, you're 50, or 60, I don't care. So you have an exit when you're 70 or 80. And you have this big, huge exit of your property, or you keep it. You keep it as a cash machine, and it turns into this at some point once you get all the debt paid off. Not as much, in my opinion, but maybe as much as a wholesaling business. But you can exit, and that's incredible. So I mean, you don't have to reinvent the wheel. You don't have to go out and build crazy brands. You don't have to like if you just want to do deals and put that money into and cherry picking the deals that you find and keep that for a long time, build up a huge asset base and then exit out of it. Woo! And now we're talking. Doesn't that get you excited? Doesn't it get you kind of like, okay, wait, that makes sense. That doesn't seem so like I have to build up this crazy company doing some other business and then try to, not make anything from it and then exit it at some point. Right? Which is what a lot of people do and what a lot of people that you see like influencers and stuff do. Build a portfolio of real estate Easy peasy. Get a property management, put the monies back into the properties that you have so that they're constantly in great shape, reinvest it into your properties, the cash flow, pay down the debt, have it debt free, either keep the cash flow for forever and pass it on to your family or whatever, or have a huge exit and, do whatever you want with it. Does that make sense? We got Tom Croll in 4 minutes, baby. Tom Croll in 4 minutes. He's going to absolutely blow your mind. So again, guys, going back to it, one last thing. I will mention this. Remember this, and this is something that was taught by Tom Croll, and he's got so many more, and he's going to blow your face off. He's going to do such a better job than I just did here with this. But remember this. It is not income minus expenses equals profit. The mentality you have to have is income minus the profit you want to take home to your family determines your expenses. This right here changed everything for me. This right here. Because I was like, I'll just reinvest in my business. I was putting it all into here, not taking anything to my home expenses, having a lifestyle that was very basic because my financial thermostat was like, I can't have too much money in my personal accounts. I'm going to reinvest into my business so that I can start firing myself from every single role. And I did it way too early. I did it way too young in my journey. I didn't have the experience. I didn't have the skills, and I lost everything. And I see people, because of this, because they go this, repeat the same year after year after year after year. Don't do it. Right here. How much do you want to take home? What's your minimum standard that you want to take home? Is it 20K? Is it 50K? What is it? That looks like a 3. Yeah, but what is it? We're talking finance. You know I'm wearing the polo today. Talk finance. You know what I mean? Like that's what we're talking about. But yeah, what's the minimum standard that you want to take home to your home to your lifestyle and what you want to invest in and what you want to do? Just remember how much that gets chopped up. Remember that when you're starting this business and you're like, oh, I need a business partner. Do you? Because all of this stuff that I was showing you gets cut in half. Actually, the tax account's the same because the money's the same, but then all of a sudden you have a business partner. And I know what you're saying because I said it too. Well, I'll just increase the business expenses. That's easy. It's because I get the income, I get to write off the business expenses, and then I pay less in taxes. Yeah, but that also means that the money that you take home to go buy assets is less. You can't avoid this. You can't avoid it. I'm telling you, unless you buy a tremendous amount of real estate and spend a tremendous amount doing accelerated depreciation every single year, guess what? You're going to pay taxes. It's the rent we pay to live in this country. So it's just a reality check. And it was a reality check for me. And I'm just speaking from my own experience and my own shock and horror at how much I had to pay in taxes. So there you go. Boom. Awesome. Thank you, guys. Great start to the show. Holy cow. Oh, he's ready. He is ready. He is the man. Somebody that I love so much, that has taught me so much, that really the one of the three mentors that I've had that really put a soul into being a business owner, really put perspective, the top at putting perspective into what really matters, helping me destroy my ego. I still have a tremendous ego on some levels, but nowhere near what it used to be. And somebody that just made this business a whole lot of fun, and somebody that every time we talk, there's something to be learned. About being a better man, about being a better father, a better husband, a better just human, a better entrepreneur. And that is my man, Tom Croll. Tom, welcome to the show.
Bam! It's so great to be here, brother.
Look at us. We are just formal today, Tom. You know what I mean?
Look, even my collar buttons. Look at that. What is that all about?
Absolutely incredible. I love it. Tom, so last time you were on the show 2 weeks ago, you were going over your rules, the Tom Croll rules. And I don't know if they're, what would you call them, Tom? Are they the rules for business, rules for life? What would you call them?
You know, it's the do's, it's the don'ts, it's the obvious stuff, it's the not so obvious stuff, it's the principles, it's the columns that keep this up. It's the guidelines. You know what it is? It's the lighthouse that you look at when everyone's paying attention to the choppy, noisy waves. It's the undercurrent that is really moving everything around. You know, we get so caught up in complexity and in making the wrong decisions. And, you know, you brought up a minute ago about, I only caught the tail end of what you were saying, but, you know, do you need a partner? No, you don't need a partner. You don't need any business partner. You don't need an accountability partner. You guys, I know I'm going to get a lot of flack from this, but can I get controversial right now?
I love this. Do it.
You know, this idea about accountability partners is absolutely a lie from the pits of hell. It's the devil attacking you. You don't need Brent and I are very successful. Our network is very successful. You know what we're doing all day? If you look at my text messages with Brent Daniels, you know what they are? They're pictures of books that we're reading. These are pictures of books that I send them and that he sends me. You think I call Brent Daniels and I say, Brent, did you make your phone calls today? No. There's no such thing as accountability partners. There's no such thing as business partners. You have to have enough respect for you and your family and your life that you're given to. You can have friends, but accountability. How dare you have an accountability partner or any kind of a partner? You want to fail in business? Rule number 4: never partner unless you can hire. Never partner unless you cannot make that hire. You never ever partner. And no accountability partners, guys. You can have friends, and all of your friends should be doing better than you, right? You're hanging out with the wrong people, and but accountability partners just a blind leading the blind. So I love it. And brother, yes, expenses equals income minus profit. Guys, this is another rule in business. Every single time your company earns money, your net worth must go up. Every single time. And if it's not going up, something in your finances is broken. I mean, this is 101. And I'll talk about, I'll tell you, Brent, a lot of people say, well, what do I do with this money that I'm saving if it's not increasing my, what is net worth? Guys, it's a really simple plan. This is what I do with all of my friends, colleagues, clients. It's 50, 20, 25, 5. This is what it looks like. 50% real estate. This is proven year after year, decade after decade for a century. This is where it's at. 50% real estate. Right? 50% real estate, absolutely no brainer, especially if you know how to buy at a discount like what Brent teaches. Number 1, 20% cash. Oh, that's too much cash. No, it's not. Morgan Housel teaches us this in The Psychology of Money. So does the richest man in Babylon. So does the millionaire next door. You want to have a strong cash position because cash keeps you in the game. That's the key. It keeps you in the game of money. 50% real estate, 20% cash. 20% stock market. Oh, I don't like the stock market because I'm on real estate. What? What? No, that's not true. Of course you like the stock market. S&P 500, not individual stocks. There's a whole bunch of symbols you can look up for that, but it's never had a 20-year period where it's failed. You get something that Albert Einstein calls the most powerful force in the universe, which is compound interest, right? So 20% of your holdings goes right into the S&P 500. 5% gold. Oh, well, what are you going to do? Buy bread with gold? Yeah, that's exactly what you're going to do. You're going to keep it in a gold safety deposit box, or you're going to keep it in a you could store gold with a depository and actually borrow against it. But what Peter Schiff and Robert Kiyosaki teach us is you need gold because it's not that gold has gone up in the last 10 years, $1,000. It's that the dollar has gone down. It's not an investment. It's a hedge. It's totally different. physical gold, 1 ounce gold eagles. My mentors taught me that. Thank God I listened to them, because now it's worth twice as much and the dollar's worth less than half of what it was. So it was a good investment. And then 5% speculation. We're entrepreneurial, right? We have a little bit of like a gambling, a little risk that we need in our life. So 5% speculation. For me, it's Bitcoin and Ethereum. For other people, it's hard money loans but it's got to be something that is high risk, high reward. I could steal it out of your bank account and you're not going to miss it. But if it goes up, you're going to crush it. And I've made an absolute, I don't mind saying a fortune in that account, because it was in Ethereum and in Bitcoin, and it was when it was lower. So 50, 20, 25. Yeah, I love it.
Yeah, they Do Financial told me buy as much Bitcoin as you can at 20,000.
Yeah.
Crazy. Yeah. Or when it was below 20,000. Let me ask you this stuff.
Yeah.
Tom, I was literally in your office, in your house where you're at now.
Yes.
And you have a big whiteboard on the side there.
I do.
And you had, every time that you got paid, you and Julie marked down, you were paying off properties.
Yes.
Which people say that is the dumbest thing ever. You could the interest rates that you had on those, you can get more higher interest lending that money or putting it somewhere else. It's good debt. How dare you? How dare you be so financially irresponsible to pay off your house and your rental property? Maybe not your single family. I mean, your owner occupied house where you live, but why would you ever pay off, rental properties early, Tom?
Yeah, I first of all, there's so much to unpack here, right? There's so much to unpack, but first of all, let's go to 50,000 feet, right? Because I caught just the tail end of what you were saying about rental properties. And let me say this to your audience. If anyone thinks that they can make passive income from rental properties, please give me the addresses of those properties so I can buy them for 60 cents on the dollar in about 3 to 5 years, right? Because it's not happening. So so rental properties, everyone, there's all these common things that you start off in when you become a real estate investor. Like, I want to live on the beach off of the rental property, the passive income rental property, and have my feet in the sand on a laptop. First of all, that would be boring after a few hours. I don't have a beach body also, but that's not fun. The other thing too is that, when you are looking at properties, I really like Dave Ramsey. I feel like people in our industry with real estate, they kind of like all of a sudden just they don't like Ramsey and they start to go towards Kiyosaki. Well, I happen to know Kiyosaki, and I will tell you something that I don't know where everybody gets this idea of debt. Debt is a tool. Don't let it make you one. It's either something's a tool in that scenario. It's either you or the debt. And here's what I'm going to tell you. Debt is a tool. It's a temporary tool that you use to leverage your position and you get out of it. Every single person in 2008 this guy was doing so good and everyone was following him, and then all of a sudden is dead broke. Every single one without exception. Guess what they all had in common? What's the D word? Debt. That's it, baby, right there. So why am
it's leverage? I'm telling you, it is leverage. It is fantastic until the leverage swings the other way.
Which can
until people don't pay rent. And listen, this happens. This happens like every 8 to 10 years. People go, 2008. Some people don't, Tom. Some people don't even. I mean, they were like 4 years old watching it, right? You know what I mean? They were 6, they were 8, they were 10. They don't know that. It feels like when people were talking about like the savings and loan crisis in the 70s and 80s. I don't know what that is. I was like, I'm going to go out in 2008. I'm going to get as much loans as I can. Adjustable rate mortgages. It's perfect. Real estate's always going to go up and people are always going to pay their rent. It's great. Then they don't.
The problem that we have is that a lot of us who've been in this game for the past 15 years, every single thing that we touch has turned to gold, and our ego swells and we're like, oh, we're great investors. You're not that great of an investor. It's just that every single day, with every property that was bought yesterday is worth more tomorrow for the last 15 years. And
Yeah.
what happens is debt catches up with you quick. So debt is a tool, use it, and then get out of it. There's no reason to stay in debt. There's no benefit to it. Get into debt to use it and then get out of it. And don't be one of the people in 2008. Why am I not in debt? Because I'm not that smart. I got a 990 on my SAT. I didn't finish college. I got Julie pregnant, who now we have 4 more after Logan, which, by the way, just got into medical school. Very awesome. I'm proud about that. So, but that's the truth is that, guys, I don't want to, it's like this infinite banking, right? Like, or I hear these weird things like, oh, infinite banking, like you could get whole life insurance, like too complicated. All of my mentors are worth hundreds of millions of dollars. None of them do infinite banking. All of them get in and get out of debt fast. They treat it like you treat a fire. Like sometimes you need it, but put it out when you're done with it. And these are simple principles. And I think that's what we all do is we tend to overcomplicate, this whole game of not just real estate, but business and just having good business acumen. I don't like being in debt. I like owning the properties that I have. And then what Robert taught me, which was genius, one of the best things I've ever learned was a 1031 exchange. And if you guys don't know what a 1031 is, I would learn today. Take your dogs and buy more expensive properties and don't pay any tax. It's brilliant. You want to talk about accelerating and just having perpetual net worth increases that just grow and grow and leapfrog. 1031. If you don't know what that is, look up 1031. Avoid the infinite banking. Look up the 1031. That's the best advice I could give a new or seasoned investor.
Well, when we went out to Florida and met with Orrin Woodward, who is your mentor and friend, and I think you guys go to church together and connect on it. And I mean, the guy has hundreds of millions of dollars. I mean, one of his things was like, don't leverage. Yeah. Don't leverage, but just pay it off. Just pay everything off or buy it cash. And I remember him telling us that, and that was probably, that was 2018, maybe 19 that we were out there. And I just was I just went out and bought rental properties cash. And I'll tell you, I could have bought, 10 properties for the 2 that I bought, totally cash. But I never think about it, Tom. It doesn't take my attention away. Attention management is really important to me, especially with young kids, especially with 2 businesses, especially with great people that I get to work with every single day. Like, I want my attention to be focused there, not on, this portfolio or who's managing it and that type of thing. So I think that there's part of that for me, but also there's a peace of mind to know that I could at any time, and I've done this before, I have a line of credit on those properties. And I could redo those lines of credit on those properties at any time if I need it, if I need to be able to pull money for that and put it into something else and or whatever, the sky falls and something, some crazy thing happens to the United States economy. But there's something position about that.
You're in a strong
position.
And here's the thing is, there's so much to unpack with what you just said. First of all, the first thing I would share with the audience, right, is there is no such thing as time management. There's only priority management. And this plays into that, right? There's also, did you notice when Brent said what he just said, right? This is what all good leaders do. This is why Brent is who he is. This is why he gets the results. You know what he just said? He just said that he was decisive. He made a decision and he stuck with it. Here's a secret. If you want to be a multimillionaire and successful and wealthy, here's the secret. Be decisive. Don't stress out about making the right decision. Make the decision right. That's the secret. Be decisive. Take the data that you have, look at the 2 choices that you have, and then pick a choice and then make that choice the best choice for you and your family and your career. And don't look back and have regret. That is the key with this. All good leaders are decisive. Who cares? Debt's good. Debt's not good. The point is that Brent made a decision and then he stuck with it and he made the best out of that decision. And who knows what could have been, because he could have bought 10 properties and one of them could have had, because he was leveraged, had a tenant that fell and the attorney saw that there were 10 other properties. And he said, I'm going to take this on contingency and let's sue him for every single one because he put them all in the same LLC. And that's what happened. So I would just say, what if you rewind this, if it's rewindable, is rewind this and go back to look at the conviction when a leader makes a decision. I love it. Beautiful, brother. Yeah. Easy peasy. I'm with you. That's easypeasylemonsqueezy.com, which I now.
So with real estate, Tom, what do you like buying?
Well, here's what I did. I am complete in my portfolio of real estate now. So now I am looking at commercial properties at the moment. I have a 1031. I sold a property. It was a beautiful property on the water. And what I've typically done on my 1031s is I'll start with a small property, like a $200,000 property. Then after a year, I'll 1031 into like $400,000, then into like a $600,000 or $800,000 property. But at about 800 to $1 million, it just doesn't make sense to continue to get more and more expensive properties. So
Right.
the one that I'm looking at now is we're looking at putting it either into a mobile home park or a commercial property. And I haven't made a decision on that. But right now, the key with income is tax, tithe, table, and take. Every dollar you make, pay your taxes. Don't play any games with the IRS. Guys, I can't tell you how many clients, friends, peers, Brent knows them too. They'll call up, oh my goodness, I owe 300, 800, 600,000, 1.2 million. As soon as you get every single time the company earns money, the wholesaling business earns money, whatever it is.
Yep.
Take tax, pay your taxes, tithe your 10%. I have no problem telling everybody to tithe. It's the only piece of advice that I have that is 100% works. So tithe your 10% to God. The money doesn't belong to you. The beginning of financial freedom, is understanding that money does not belong to you. We are only stewards of money, and the better stewards we are, the more we'll be put in charge of. So tax, tithe, table, which means save. That's the 50, 20, 25, 5, right? 50% real estate, 20% cash, 20% stock, S&P 500, 5% gold, 5% Bitcoin, or whatever you like. And then live off the rest. If you can just do that, then a simple question like, hey, how much should my net worth be to buy a $50,000 car? That's the right question. How much should my net worth be? Not my cash flow. Poor people look at cash flow. Poor people make decisions on month to month on cash flow. Net worth is because all of a sudden, if your net worth is only $100,000 or $200,000, you're going to put 50% or 25% of your net worth into a $50,000 car that's going to rust and waste away in the driveway. You don't build up your credit to buy a car. No. $50,000 car. Here's what I'm going to tell you. It's going to stink, right? It's going to be about 3 to 5% of your net worth every 3 to 5 years.
That's it.
That's it. Don't. Some of the wealthiest people I know, they always buy used cars. They never ever, God forbid, would ever lease a car ever. Don't. And I don't want to hear about a rental program. Don't lease a car. Don't let anybody trick you into that. And you would never finance a car unless it's an absolute emergency and you have to for some reason if you have a family. But otherwise, there's nothing wrong with a $3,000 car. We've all had them. If you want to become financially wealthy and be a good steward of your money, look at your net worth and your cash flow on that. But
well, I mean, you were a multi-millionaire, and still, what were you driving? That Chevy?
We have we have photos, you and I, of every time I go out, Brent's like, what is this car? We had David Lecko in the car. What was that? We had some crap. I don't. Yeah, no. The older I get, the more I don't want to. No. I'm not wasting money. Now I'll spend money on good things that I love and like. I got Luna over there sleeping. That's an expensive dog right there, right? She's not joking around. That's a Birdie's Mountain Dog. She's the best. So I'll spend good money on good things that I enjoy for my family and I. We go on, beautiful vacations. We were just in Rosemary Beach and then we went somewhere else. And, I'll do that kind of stuff. But guys, you don't want to, life is short. Be a good steward of money. And the better steward you are, the more you'll be put in charge of. I guarantee you, if you want really good financial advice, be a good steward of money. Don't avoid debt like it's the plague. Get in and get out. Just use common sense. Don't overcomplicate business. Business is easy. Owners are complicated.
Yep.
There's nothing difficult about, wholesaling or selling door hinges. I don't really care what you do. It's all the same. The product or service is totally inconsequential. Just keep it really, really simple. Read 8 pages a day. Easy. Just read 8 pages every single day. You'll never see me without a book. Retention Point. Great book right here.
Great book.
Trevor Mock, he's the one who recommended this one.
Yep.
I'm halfway through this one. I mean, it's I'm surrounded by books and good people.
So give us a couple more principles. I know that you had like 88 principles, and we went through 8 of them. Give us 2 more for today, and then we'll save the next for next week. By the way, guys, Tom has I mean, unbelievably committed some time to us every single week here on this show to just pour into us. And I just love it, Tom. You're the absolute best. And for people that are watching this and understand, like, Tom's life is for his family. Tom's life is for himself. Tom's life is for his church. Tom's life is for the people that he works with. He didn't know he doesn't have to do this. You know what I mean? And he does it for us. And if you can, give him some love in the comments, give him some love in the chat. And I think it's, Tom, it's one of those things where you see people that are really big on social media, really big with following and with they get a lot of attention and everything seems really crazy and over the top. And so I look at you and like that's life. That is like true joy. That's true fulfillment. It's not just like happy. You know what I mean? I feel like happy is like this, flash in the pan type of thing, but true fulfillment, that's the zone where I want to hang out for sure.
Brother, I appreciate that, first of all. And second of all, I will say, everything that I talk about comes from me making mistakes. So even though everything looks great, even for me online, the other day, Luna pooped on the front porch, or I'm sorry, Luna did not poop on the front porch. My youngest pooped on the front porch, and then Luna came by and ate the poop before I could clean it. So my life online is not as perfect as it looks. But I will say this, right? I think that I'll give you two quick other rules that you guys can implement right now that are super easy peasy lemon squeezy that you can use for your advantage. I'll give you a fast one, and then I'll give you one that's a little more, give you some time to kind of think in the morning and breathe and meditate on. The first one is, here's the first one. Don't listen to rumors. I'm going to tell you right now, I guarantee you guys, Brent and I are very close. I guarantee you if I called Brent right now and I said, hey, did you hear about X, Y, and Z guy did you hear about who we were just talking about? David Lecko. Did you hear about David Lecko? And this other crazy thing happened. By the way, nothing happened with David Lecko. I love him. But what he would do is, you know what he'd do? The same thing I would do. Oh, Brent, something just came up. I got to jump. Let me jump. I'll talk to you. I'll definitely call you back. Bye. And he would hang up. So just remember this, guys. Whoever listens to the rumor is weaker than the person spreading it. So here's what I'm going to tell you. You are being manipulated when you listen to a rumor. You're being molested. You're being like put under someone's mantle. So don't allow it in your life. Don't allow people to pour into you that way. You want to destroy your business in 2 seconds? Take the time to listen to a rumor and you'll destroy your business. I guarantee it. So number one, don't listen to rumors. You're weaker than the person spreading the rumor. Avoid it at all costs. Let's get into the other one. Why is Brent successful? Why am I successful? I'm going to give you guys a little tip, a little trick. We all do it to each other. All the best people do. And it's called 40 good people. It's called 40 good people. Here's what I want everyone to do right now. It is going to change your life and your business radically overnight. What I want you to do is I want you to make a list of 40 good people, influential people, powerful people, leaders in your town, in your city, your community, in your industry, in your space that you're in. Make a list of 40 influential people that have power and influence and celebrity or whatever it is, pull and authority. They're specialists in that area. Then what I want you to do is I want you to write all of those 40 names over an 8-week work period. I want you to write one name Monday through Friday. That's going to put you out to 8 weeks. Every single day, I want you to reach out to one of those 40 people. And I just want you to, this is what Robert Cialdini teaches us in the book Influence. He calls it reciprocity. All I want you to do is I want you to send that person some love. Either call them, send them a victory bell, right? Send them, if they have a podcast, say, hey, Brent, there's
send me this.
There you go. There's the result.
It says easy peasy lemon squeezy on it, by the way.
Yeah, which I own. I own that.com, which I love.
I know you do. That's exciting.
Yeah, I do. So here's the deal is you call them or you send them a text and you have asked for nothing. Ask for nothing. Just, hey, Brent, I saw you had a podcast. I liked it. I subscribed to it. I shared it with my audience. I left you a 5-star review, a 5-star rating, and I reviewed it. Good luck. I'm always rooting for you. Have a great adventure today. That's awesome. It. Guys, what you will do with these 40 people is you will build reciprocity.
Mhm.
What does that mean? It means the minute that you develop a company to sell door hinges, or you start buying houses, or whatever it is that you do, I guarantee you that when you call and you say, and you've done this now for 8 weeks, 16 weeks, 32 weeks, I guarantee you are going to experience exponential success, because all of those people are going to have been waiting for an opportunity to help you in any way that you need help, with a referral, with a review, with a character testimonial, with an introduction. These people are now on your team. That's what you're doing with reciprocity. So 40 good people, 8
That
weeks.
is amazing.
Oh yeah, it's a game.
Are you putting these 88 in a book?
I
You have
am.
88? Yeah.
There,
Because people are asking for it.
we have a publisher. I actually should hear back today if we're going to get the advance or not from this publisher. So we had a little hiccup in the publisher. We had and also he's changing the first guy. He changed all the numbers of I had them all like pretty much memorized, and now I'm all over the place. I don't have anything memorized. But yeah, we have it coming out, and I mean that one principle. Honestly, guys, life is really, really short.
Oh, good.
Whatever your version, remember, wealth is an external comparison to other people. Either I have more wealth than Brent, or Brent has more money than I do, right? Wealth is an external comparison. Success is an internal comparison to your ideals. It has nothing. I can't be more successful than him, and he can't be more successful than me. So here's what I'm going to tell you. Whatever your version of success is, it includes some variation of a good night's sleep.
Yep.
So guys, here's the key with business. Don't do anything for wealth that takes from your success. Whatever your version of success is, it doesn't include being up at night riddled with anxiety and crippling depression, right? You want to put your head on the pillow and go to sleep and know that you can deal with whatever's coming and looking forward to the next day. Guys, simple things. Simple things, your network, your net worth, the simple things. Do the right thing. Don't sacrifice success for wealth. Keep it simple. Grit, perseverance, hard work, hustle, and then you only have to do that for a season, and then you just live off those fruit trees forever. I wish I could show you my garden.
You're the best. Absolutely the best.
You're the best,
I got a text message from Matt, my producer, saying that he's never seen your dog move. So he's not sure it's an actual dog or if it's just a stuffed animal. So,
well, when we wrap up the call, I'll say here. All right, well, guys, thanks. It's been awesome. And then she usually gets up.
Yeah, there it is.
There you go. She's the best.
Matt,
I love her.
Matt, do we have sorry, I kind of introed Tom before we did it. We did a custom intro for you. So we'll do it as an outro for you, Tom. Are we ready for it, Matt? Oh, he never finished it. All right. Next week, we're going to have a whole intro. It's a great, and we'll have that for you next week. But Tom,
I love it.
Guys, give love to Tom in the chat. Thank you so much for being here. Tom, you're the absolute best. Wealth is external, success is internal. And oh my gosh, I mean, that should be, I'm going to post that somewhere in our office here for sure. Thank you, Tom. You're the best. Love
guys.
You,
Be well. Talk soon.
See you next week. Okay. Guys, every single week, Tom is going to come on and just give us that fire. Isn't that absolutely incredible? He's the absolute best. So we've got a couple questions here. We've got, before we move on to the next segment, where we're going to be talking about the top tools that we use in our business, and that'll lead into discussing PPL, which is pay per lead. And we have the owner of propertyleads.com coming on here in about 15 minutes. So make sure that you stick around there. But we've got a couple questions. Patrick asks, let me show this. Do you have any bubble for cash flow? Not really sure what the question is there. I think that a little bit more clarification would be good, but I think that when it comes to property and owning the property, if you look at the stats, it's anywhere from $2,500 to $3,500 a year in upkeep for a single family house. If you look at what it costs to turn over a property, it's about the same cost depending on the size of the property for carpet and paint. So whenever I buy a property, the cash flow in my mind always goes back into the property, because remember, every 10 years interior design changes. And if you're talking about exiting your portfolio at some point, or getting the top rents that you can, you got to update your properties, right? You see so many properties that are rent ready, which have the same kind of flooring that they have for the last 10, 15, 20 years or whatever. At some point, you're going to have to upgrade that if you want to get the most out of every single property, or you're going to have to sell it to an investor that wants to, that's not going to give you full market value. So you're going to have to invest into your properties at some point to get the full market value. So remember that. That's something really this thing really took me by surprise when it came to cash flow and putting it back into because I thought, I'll just, buy, 100 properties and get, $1,000 in cash flow a month from them eventually. And then I'll have 100,000. No, each one of those properties, if you look at it, costs probably $200 to $300 a month in upkeep or some major repair going on at some point, or some major cosmetic improvement at some point. So whenever you're looking at cash flow in those, I would factor in at least $200 to $300 per month going back into those properties, and then you could talk about the cash flow. But remember, the cash flow that you get from that is going to be taxed. Your business partner is still going to get some of that tax, right? You can depreciate it, but again, if you look at real depreciation, it just reduces your tax basis, not dollar for dollar. And if you do accelerated depreciation, you got to keep it that 20 years, or you got to pay that back. Got it? Awesome. Caleb asks, would it be a good idea for my first deal to go PPL route and ask somebody in the tribe to JV with me? I have a budget, but no time. 100%. I think that's fantastic. The only reason I suggest not to, and it's, Matt, if you could put some of the downloads that the blueprints, the marketing blueprints in here so that I can share that'd be great. I know that you've got it accessed pretty quick there. The only reason I suggest to not go PPL too soon or without any experience is because typically you're gonna be competing with other offers. You're gonna have to be really on top of that lead as soon as possible, and we'll talk to Andy about best practices on that here in just a few minutes. But you gotta be ready to negotiate. You have to be ready to. Nope, that's not it, Matt. It's the chart. Yeah. That one. There you go. If you look at PPL here, if you don't have experience, or even if you do have experience, but you don't have a budget, I wouldn't go there. But PPL is really great if you have a budget for it. If you have a budget for it, I would go PPL 100%. You know what I mean? And then share it with somebody and it'll be awesome. And so there you go. We only have 2 questions out of this whole live. Out of everything that we've done for the last hour, we've had 2 questions, Alejandro. Okay, well, there you go. Here we go. Chris at Crispy Bacon, my favorite, asks, what would you do if your property requires flood insurance and it makes the mortgage higher than rent price? I want to rent my house, but not sure if it makes sense. Mortgage is about $200 above rent. Cash flow. I mean, you're going to get crushed by cash flow plus upkeep. So, I don't know. I just don't like coming out of pocket every single month, especially if, there's a vacancy, especially if the tenants don't pay for a little bit. That turns into a real nightmare real fast. And so, that's up to you and something to talk to whoever your financial advisor is. But I get it from a like appreciation. I assume you live in an area that appreciates. And I get it. The longer you hold it, the more it's going to appreciate and the more wealth you're going to build from that perspective, but it's going to eat away your cash flow and it might cause some problems in making those payments long-term. But, if you've got the cash to cover it, maybe, but I wouldn't. I mean, me personally, I wouldn't. All right. Awesome. Before we get into, okay, here we go. Daniel, my dad has $60K in his retirement account. He turned 60 in 3 years. How can I help him invest the money in deals within the next 3 years until he can withdraw his retirement fund? Thank you, Daniel. That's a great question. So this is perfect because this is in my wheelhouse. My dad was an executive for a company that had an exit. and he had what was called Class A shares. So when they sold to a bigger company, he got a dividend payout or a big payout for those shares. And what he does is he lends it to us when we go to close deals, and then we wholesale them, or we close them and hold them for a little bit to do evictions, or we close them and hold them a little bit for post-possession, or we close them and do a flip. Very rarely will we do a flip unless it's like very, very light cosmetic. But he turned into a private money lender. We give him 12%. And I think, some sort of point in there, just because I love him. But so we have no cash into the deal, which keeps our cash flow from our business always moving. Now, I put my money into those. He puts his money into it. It just depends on how many deals that we're doing that we're closing, but that allows us to close on more deals. And so I think that that's a really great option. He could also get into an opportunity where maybe it's a down payment on an investment property. But remember, with investment properties, you want to be holding those for minimum 20 years, in my opinion. All right. So there you go. Here we go. Jaquan Rice asks, when cold calling, should I act as the investor buying or as an acquisition specialist who has a partner underwriter who must approve the purchase of a deal? It's kind of both. You know what I mean? I mean, you're reaching out because you want to buy it, but you got to make sure that you do your due diligence and your research. You can keep that in-house. So RJ Bates says, and he rants and he raves. Oh, everybody's saying that they have a finance department or an underwriting department, and they're lying, and you don't need to do that. You should have more confidence. That's one route to go. The other route to go is my acquisition managers. I am the underwriting department. You know what I mean? If you have a coach, your coach is your underwriting department. If you have a mentor, they're your underwriting department. If you have business partners, this is, in all things, be truthful. Just like Tom said, and I love this, success is internal. You got to be able to sleep at night. If you're not able to sleep at night, you're not successful. You're just like adding more stress to your life. You're just reducing the amount of fulfillment you have in your life. And that's the whole point of this thing, right? One is to recognize the potential that we all feel inside to do something amazing, to be of service. Why are we on this planet? To be of service to other people. Some people just are of more service than others. Some people's companies are of more service to others. That's why some companies make 100,000, other companies make 10 million. They are more service. They provide more value. So I always went, when I was calling, I was the buyer. I had to do some research to be able to pull it up, to really understand it. But what I always did was I would call and I knew it was an ugly house because I would only call distressed property lists. Rafael Cortez in the house. There were always distressed property lists. And because I knew that they were distressed and I was looking at them on Zillow when I was talking to them, I tried to set an appointment as soon as possible. Now, obviously, if you are virtual, then that's more of setting an appointment to make an offer. But I was always, let's get out there. I'll do my research on my way out there. But before I do, I'm pulling out the 4 pillars, right? Pulling out the 4 pillars. Can we get the 4 pillars stuff? Can you just load this thing up, Matt, with the usual suspects, please? But 4 pillars: condition of property, timeline to sell, motivation, or what is their problem, and their price. All right. I'm going to get into, think of some guys. Rafael Cortez is here. Absolutely incredible. There he is. Think of some tools you want to share, maybe something that you've started using or going to use. I'm going to get into the tools, but before we do, it's time to pop a balloon. All right. Now listen, we're out of hats. Matt, you can go to my lapel here.
We're out of hats. So we have the classic TTP. Where's the camera angle here? Got the TTP. There we are. TTP shirt. This is for anybody that's participating and subscribed. We got the hoodie, the Rhino hoodie, very popular. I know it's getting warmer, but maybe you're going on a plane. Planes are cold. Planes will always be cold because they're, 30,000 feet. And then we have the master lead sheet. This is a sheet that you fill out when you're talking to a property owner. I'm going to put it inside of this adorable puppy trapper keeper. So it's going to be in the Trapper Keeper. I'm going to throw that in there. There's a little homage to my childhood in the 80s and 90s. I know I'm old, whatever, but I'll send it to you, and it's still cool because it's adorable. So you can keep that to keep all your notes. I'm going to throw these darts and get going. Here we go. You'll throw the next ones, Raph. All right, guys, orange balloons is going to be the Trapper Keeper and the lead sheet. The hoodie is going to be the black ones, and then the T-shirt, the white balloons. All right? All right. Who wants the Trapper Keeper? Yeah, you do. You want those beautiful puppies, don't you? Let's see what we can do.
Whoa.
This guy, I'm telling you, this guy.
Right.
Great to see you, brother. Great to see you. I'm telling you, I don't even know why I pick up these mini darts. I don't need this many darts. I just need one dart, baby. One dart.
Pop that with your eyes.
That's right, with the lasers in my eyes. There you go. Raph, what okay. Sip Rodriguez wants the Trapper Keeper. There you go. Guys, be nice to Alejandro. Alejandro's the one that decides who gets it. So give some love to Alejandro, and that usually helps things out. But any new tools? I got a few that I want to go through. Any new ones that you like?
Not necessarily new ones, but we're having we're leaning a lot right now on PropStream for virtual stuff.
Okay.
Especially going national. It's
Do you have
looking at all the different markets
affiliate
and
for
everything.
that?
No, I actually don't.
TTPdata.com.
TTPdata.com, yeah.
TTPdata.com is PropStream. What do you use it for?
I mean, we're using it a lot for comping. We're looking at pre-foreclosure data on it. We're leaning. My TC is actually going through all that information.
A TC?
My transaction coordinator is using it a lot to just verify information and stuff like that. But out of all the platforms out there, I think it's one of the ones that has been able to collect the most info in one single place. So
awesome.
So, but yeah, we're just leaning harder on PropStream right now.
I'm going to pull that up here. It's TTP data. Oh, hold on. .com. All right. Here we go. Here's a few. I'll go to propertyleads.com. We've got the owner of Property Leads, paper lead company coming in here.
Nice.
We use them. A lot of people use them. RJ Bates is on the podcast. He's been using them a lot. Guys, US lead list is absolutely going bananas right now with the Rhino tribe and with our company. This list, when you target it, I think that it is really smart to, did I share it, Matt? No, I didn't. Let me give this share screen and boom. There you go. Share. There we go. US leads list. US leads list. These are pre-probates. This is they scrape the obituaries and find property owners in the marketplace. There is only a certain amount of spots available in each market. If you don't have it, get on the waiting list. This is one that will absolutely, you will be so happy with me. You will be like, you're going to name your firstborn's middle name Brent after this. I'm so confident. It's incredible. And these pre-probates are the whatever. You guys get it, but you can't get this list anywhere else. I'm just telling you, there's nobody else that has this list. Next, all of the other probates and pre-foreclosures and code violations and tax lien companies, they white label. Hold on, they white label these guys right here, which is realsupermarket.com. realsupermarket.com right there. These guys are absolutely incredible. They're like the brain children of all brain children when it comes to lists. I don't know what that means, but they're really smart and they do a really great job. This is a incredible resource so that you're not paying like double for what you usually pay for some of the other services. Once I found this out, who they sell to, and I mentioned it last, I was like, oh my gosh.
Yeah, the uptick.
I felt like an idiot.
Real quick,
because I was paying double what I should be. And
side note on US leads list.
Yes,
it is. They do have a wait time a lot for, sometimes for the big markets.
Yep.
Definitely put your name on there,
Yep.
but also ask them what other markets they have available.
Yeah.
Like if you don't have any
True.
leads or any access to your current market, find out what other markets they have and start getting in that way. It's worth it.
Yeah.
It's absolutely worth it.
Awesome. Flipfinder.ai, guys. Flipfinder.ai. This is where you go and get the AI lists. They take the demographics of the properties that have sold over the last 40 years, the demographics of the seller and the characteristics of the property smushed together. It's a phenomenal list. We get a tremendous amount of results from that. We also have share screen here. We've got Deal Machine for driving around, for your driving for dollars. 80% of new real estate investors get their first deals from driving for dollars. Do you guys do driving for dollars with when you're knocking the pre-foreclosures, or you just knock the pre-foreclosures?
Yeah, I mean, we'll get some. We start building a list. I mean, if they see distress, physical distress in properties, they'll jot it down, and then we'll skip trace it.
Awesome.
Yeah, we actually have a process for that where they send it in. Then we have a VA that catches all those addresses, skip traces. We hit the phone, and then we'll send them direct mail.
Awesome.
And of course, the door knock.
Of course.
We've
got the last one is all roads lead to pay-per-click. Pay-per-lead is fantastic, and we're going to get into that with Andy, the owner of Property Leads. But guys, I'm telling you, we are going bananas with our pay-per-click. Pay-per-click are the best leads that we close right now. They're the fastest. We have complete control of them. If you have interest in pay-per-click, talk to my team at talktopeople.com. Talktopeople.com. Check it out. You need to have a budget for it. If you're in a small market, you're gonna want between $5,000 and $7,500 a month. If you're in a major market, $75,000 to $10,000 a month. So I will tell you that.
Yeah,
I'm not going to be we're not the guys that are like, yeah, you can come in and spend a couple grand. It's a total waste of your time, and you'll be pissed. And I love you, and I don't want you pissed. So there you go. There are the tools for this week. What are you closing this week, Raf?
We're closing another one in Tucson and 2 in Florida this week.
Awesome.
Yeah.
What are you making?
The Tucson one is 57. I think it's gonna be a 57K, and then the 2 in Florida, one is a 30, and the other one is small. It's 18, I think. So yeah, this week, healthy week.
Healthy week. I love it, guys.
Week.
It's time. Let's get into Paper Lead. We are going to bring on the master of this. They've been doing this for a while. They've sold a lot of properties through propertyleads.com. That's what I just presented right there. Andy, welcome to the Brent Daniels Real Estate Live Show. How are you?
Good, man. How are you?
I'm absolutely fantastic. I didn't want to butcher your last name. Is it Koloji?
Sure. It's Kolaji. It's Polish.
Kolaji.
Not the easiest thing to say.
See? That's why I was like, yeah. Andy from Property Leads is going to be here. So, Andy, what is PPL?
PPL stands for pay per lead, and so the theory behind it is that you take all the marketing hardship out of your bucket, and you go to a company like Property Leads. There's other companies out there too, but like Property Leads, and they'll do all the marketing, and you buy the leads on a pay per lead basis. So there's no subscription, there's no upfront cost, there's no monthly sign up fee or something like that. You just know that when you get a lead, it's a workable lead. It's not always going to be a deal, but it's a workable lead, something that you have the opportunity to go make money on.
What does workable mean?
Workable to me means that it's someone who actually has intent to sell their house. It's someone who you can get in contact with. They have intent to sell their house. We consider it to be a single family, like a 1 to 4 unit type lead. So if it's vacant land, if it's a mobile home in a park, that kind of thing, we're going to refund that kind of stuff. Same thing if they actually don't want to sell their house. But to me, that's a workable lead. There's actual, some level of qualification to mean that they're interested in selling.
So, and I don't know, Raf, if you've experienced this with some of your people in your community, but in the tribe, people have been tricked by all these Instagram ads and Facebook ads of, hey, we'll send you all the leads and you pay us after you close them and blah, 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 blah. Well, what people don't realize is, they charge you $8,000 to $10,000 up front, which is bananas, before you can get any leads. And the second thing that I've been finding out is they're sending people text message leads, cold call leads, leads that they don't want to close from their own PPC or SEO. And it's basically just, grabbing naive real estate wholesalers and investors saying, we'll send you leads. It's too good to be true type of thing. And they're really good and the sales are good and everything's fine. But in my experience, the students are like, oh my gosh, this is like horrible leads, horrible opportunities, horrible customer service. I'm spending a bunch of money and it was just a total waste. So where do your leads come from? And how can you make, and how are you different than these other companies that promise we'll give you all the leads, you just pay us after you close type of thing? You're charging people up front.
I got to follow up.
We're charging people. Do you want to go first, Raphael?
No, go ahead.
We won't load too many questions on you at one time. We tend to do that.
Okay, all good. For sure. Yeah, so a lot of our leads come from SEO, actually. When I first got into this space, if we actually go way back to the beginning, the reason I actually got into this space was because of Brent Daniels. I read one of his like crazy cold calling PDF books, and I ended up cold calling for a long time. And for me, that was a terrible decision. So then I got into PPC and SEO and stuff. And from that time onwards, we started launching a ton of SEO sites. So if you search, my name, or you search sell my house for cash, sell my house fast, that kind of stuff online, you'll see one of our sites very often. Sometimes with my beautiful face, sometimes with someone else's beautiful face. On that site. So that's where most of our leads come from. We do a ton of their marketing as well, but everything we do at the end of the day is always going to be inbound. We don't do SMS. We don't do cold calling. Even if we could produce an amazing lead doing that, what we've typically found is that then you have that when you're going through the sales process, that seller is going to say, hey, well, you called me, what's my house worth? And we're just always trying to avoid that part of the conversation. So for us, if we have to go into the conversation with that level of, that type of conversation with the seller, we're just not going to do that kind of marketing. I hope that answers your question. Does that kind of get to what you're going for?
Well, go ahead.
Yeah, no, my follow-up question was, how are you pre-qualifying, when you're sending in the leads and kind of filtering, the noise from the actual leads that you're talking about?
So it depends on the marketing channel. For SEO and PPC, like search PPC, we do it definitely a lot less filtering. We'll filter out MLS, we'll filter out wholesaler as best we can. But for that stuff, we let a lot of it go through because the intent is so high. Now, when it comes to like, if you're doing more interrupt type marketing, let's say a YouTube ad or a Facebook ad or something like that, we might force them to call in to verify they actually want to sell their home. We might force them to do an SMS verification to verify they want to sell their home. That way, we're not just getting a bunch of garbage from whatever ad channel it might be. We can actually get some real clarity as to what they're doing. And then the third piece we do is we've done a lot of machine learning modeling and kind of looked at, okay, these are the types of leads that sell, these are the types of leads that don't sell, regardless if it's on market or off market. And we're starting to filter out a lot of those leads that we just don't believe have any real interest in selling, to try to overall the entire system increase the level of lead quality. And we think and we hope that given enough time to continue to do that, we'll start to produce a better lead quality than what you can get on your own going out to Google himself, if that makes sense.
So do you sell certain areas? Like it's a kind of like a bidding system, right? Like how does that work?
100%. Yeah. So we sell it based on the geography. And so the lead quality is the same across the system. As leads come in, you're getting a lead in real time. We're not going to hold through it for a bit and let you view the information and then determine whether you want to buy it or not. The leads get sent out in real time. And then lead prices start about $125 based on the county level, and they go down to as low as $50 if you're buying, nationally, or $75 if you're buying it across the entire state. And then if there are a lot of people in the county and people want to own all the leads that are coming to that county, they can bid more, which means outbidding that person, which would allow them to get more leads. It costs more for them, and that's how we kind of design a happy place in the market for what a lead is really worth.
So I get a lead from you and they don't want to sell, or it's listed or something like that. What happens there?
You can refund it. There's a 7-day refund policy. You just go back into your system. A screenshot would be great if you could just have a screenshot or a call recording or something like that. And if you don't, that's okay too. We'll do our best to figure it out on the back end. But if you submit that for a refund, we very often will give you a refund for that kind of lead. The situations where we have a hard time refunding is if, let's say, Raphael's team, they couldn't get in contact with the lead after 7 days, but 3 days after he submitted for a refund, we were able to get in contact with them. They said they wanted to get an offer on their house for cash and they still want to sell and that kind of stuff. Then we'll decline that refund and we'll try to pass it back to that person. Because to me, if someone, says they want to sell their house for cash, I think there's something to work there at that point.
Talk about the difference in conversations between inbound and outbound leads?
It's a great question. I think when you're going for an outbound lead, you're having to filter through a lot more people. And I wouldn't say I have the most experience in outbound because I tried to avoid it as much as possible. But an inbound person to me, they have intent to sell their home, and they're at this point they're sourcing offers, they're sourcing information as to what they want to do. Versus with an outbound conversation, they might not yet have decided they want to sell their home, and so you're kind of the intro level person. And I'm more of a data guy than probably like a feeling kind of guy on that side. And so when we look at the data for the outbound lead generation that we've seen versus the inbound lead generation that we've seen, we see about a 3-month extra delay in terms of how long it takes for that home to sell. So we typically look at like a 0 to 6 month timeline for inbound leads. Most sell within that 6 month period. And if you do outbound, you're looking at 3 to 9 months on the rip, sometimes 3 to 12 months as well. So the timeline gets a lot longer. And hopefully you've experienced that as well. Maybe my data is completely wrong, but I'm curious what you think.
100% right. I mean, with our leads from you, from pay-per-click, which I feel kind of fall into the same categories, and I want to talk about best practices here in a second. But when they fill out the form, they want to sell. They want to sell now typically. And listen, sometimes you go through 10 leads or 15 leads or whatever it is to close the deal for whatever reason. Maybe you miss out. Maybe they sold it to somebody else. Maybe they're not as serious as they said they were. You're going to go through some of that. It's not like every lead's going to close, or it would just be, bananas, right?
I do have a
you
KPI
still have to have the
question
skills,
regarding
huh?
I do have a KPI question regarding that.
Yeah.
I'm a data guy.
Oh, you do. Go ahead.
No, go ahead.
No, I'm just saying that when it comes to cold calling and texting, it's typically between 100 and 120 days from initial contact to close. When it's a PPC and PPL, it's 45 days. And most of those, honestly, we close within 2 days of initial conversation, and the length of the start to finish is just because they need more time to move their stuff out or clean it up or be around for the closing, that type of thing. So much faster sales cycle with inbound
100%.
versus outbound, for sure. It's not even close.
One thing that we've seen with inbound versus outbound too is there's usually a lot less issues with that type of lead, PPC lead, right? Outbound and the stuff that we're door knocking, we're going out there and actually trying to catch it. There's always clouds on title. There's probate processes. I mean, there's a lot more bugs within the deals themselves. PPC leads tend to be a lot cleaner too. Yeah. Yep. With that being said, I do have a KPI question regarding the average, right? Of course, I know it's hard to tell depending on the skill set of the closers and all that stuff. But what are you seeing on average leads to contract and then leads to close?
It's a really great question. And I'm going to take it a step backwards first before the contract and stuff. And when we look at data, because I can't, there's no giant contract database online where I can see everybody's contracts as they worked on properties and stuff. So we look at title transfer. So we take a step back. We're looking at about a 50% title transfer within 6 months of the leads we send out post refund. Now that means like 50% of them are transferring title. That doesn't mean that 1 and 2 are turning into a deal for any one person. Half of those are typically on market, half of them are typically off market. And even within that scope, one of those might have been a lease option, one of those might have been a sub 2, one of them might have been a wholesale or a flip or whatever it might have been. One of them could have been a buy and hold, And so we try to aim for that 50% mark when it comes to total title transfer. Now, when it comes to leads to deal, what we typically see is around that 1 in 10 mark, but it really varies. What we see is the people who can monetize every contract that they ever get the best possible. So they could turn it into a self-finance deal or a sub 2 or something like that. Or maybe they're an agent as well. They can do 1 in 4, 1 in 5, 1 in 6. But then the guys who are purely nationally, they're just wholesaling. They don't do any other dispo strategy at all. It's closer to 1 in 20, 1 in 30. So there's a huge range there. And a lot of it, as you said, depends on, sales process, skill, and then ability to monetize that contract into some kind of cash.
Awesome.
Andy, lead comes in. How fast do we have to get in touch with that property owner?
Immediately, as fast as possible. And what we typically see today is
like give us little stats. You know what I mean? Like
when we look at it, we try to aim for under 10
and then it takes a few minutes, and bebop, boobop, and the technology, and then all of a sudden it's
That was very technological.
50, well,
right
that's
there.
basically the sound that computers make.
That's
just
the sound of
that's
science.
thing, and science for that matter. And so anyway, so the property lead comes in. Does it instantly hit us? Like, are we instantly alerted?
Yeah, it takes probably about 15 seconds for us to process everything because we're trying to strip out the MLS and the wholesalers and stuff like that. But yeah, it's pretty immediate. And what we've seen, generally speaking, is the people who are having the most success are triple dialing the leads on the first call. And that's for two reasons. One is iPhones block the first call if it's an unknown caller, so you have to call at least twice to get through the block. And then the Hyatt app, which is getting installed on a ton of phones right now, it's pre-installed on T-Mobile phones today. It's pre-installed on Verizon phones today. That's blocking people who don't triple call on the first call. And so that triple call breaks through both of those barriers to entry on that initial call. And those people are doing a lot better across the system than we see the people who are just calling once, send a text, and then move on to the next lead type thing.
Right. Oh, that's a great. So wait a second. So the T-Mobile phones are blocking any like unknown numbers if they don't call 3 times?
There's an app called Hiya, Hiya, and it's getting pre-installed on a lot of phones from a lot of providers today. I believe T-Mobile and Verizon are the two providers that are pushing the hardest right now. They're partially owned by the carriers. Wow. And if you have the Hiya app installed,
that is great,
you have to triple call to get through it.
Yeah.
Holy cow. Talk about great info. I had no idea. That makes sense because we have some PPC stuff that we triple dial always. I mean, that's just the thing, but I have a new acquisition manager, and Ryan and Chad were out of town in a week in April, and he couldn't get a hold of like 9 leads. And he wasn't triple dialing. Wow.
Yeah, it's been going on for a few months. Dude, you just
changed my business big time. I got to tell these guys. Okay. That is awesome. And then with Apple, it just blocks the first, so you have to call them twice.
Yeah, on the iPhones and stuff.
Wow. Yeah. Listen to that. Hey, for you guys that have stuck around on the show, I mean, we were up to like 80 something people at one time, and now we're at 60. You guys just got, talk about lead follow-up, talk about income. Even what if somebody calls you first? What happens then? Will they know that you can just call them back?
I think on the iPhone allows it through if you call them and then they call you type thing. I don't know about the Hiya app. I haven't really tested that one specifically.
If you're reaching out to them from a web form, 2 to 3 times is the minimum that you got to call them back to back.
I'd say 3. I'd say keep
triple tap.
Yeah, do a triple
for
dial.
Sure.
We have that as a standard.
I'll tell you what, Andy.
Yeah.
I'll tell you what. You're just bringing the heat, bro. I love it.
Thank you, man.
Awesome. So there's a couple different strategies, right, Andy? There's, hey, I want to dominate my market like me. I want everything that you have in Phoenix. By the way, I need a lot more. So I don't know what you need to turn on, but this is me calling you out. I need more from you. Okay. In Arizona, bring the heat. I'll buy them all. But there's ones that are like, hey, I'll do all that. But then there's also RJ Bates, who has really converted from a couple of different resources over to you guys, that just buys them kind of anywhere.
Yep.
Gets the leads in, has a budget of a couple thousand. So he'll buy those $50 leads. He'll buy those $65 leads, those $70 leads in the middle of nowhere or whatever in smaller markets. Check investor lift for, he's got the investor lift for the country. And then just go, okay, I can buy this. This is the price that I'll buy, put it on investor lift, and then get those things sold. And that's his business model. And he does it all virtually. Right. He's just calling up your leads. He's just calling inbound leads throughout the country, making offers, and then putting them on investor lift and wholesaling them.
Yeah. He actually uses investor lift to comp in those areas and see what they're offering too, like what they're selling at. So it gets a couple of points of data from that.
So what do you see as what would you do?
What would I do?
I'm asking you, Andy. Yeah. What would you do? Would you do an RJ Bates model or would you do a focus model? What do you think?
It's interesting, and I think it depends on the person. I'll say the 3 things that are working really well right now across the system is the RJ Bates model, where you have someone buying leads for $50, $60, something like that area nationally. And they're crushing it because you really can't get a cost per lead that's cheaper than that. Like we actually lose money on those leads. We use it as kind of just a way to recover costs. So they're absolutely crushing it. And then there's the people that like the Tom Caffarellas of the world, where they're just tearing down homes in Boston. And they're just turning them into 8-unit, 20-unit apartment complexes. They can buy leads for whatever. They don't even care about the cost. They're just trying to get something to tear down at this point. So they're bidding up huge swaths of areas and stuff. And then that third category is people, and I put you in that category too, where you're buying up a nice market. You want to get as many things under contract as possible. And then that third category is someone who wants to they want to target the major DMAs. They're a major DMA kind of guy. They don't really care exactly where it's coming in, but they want to target, the top 700 counties. And those guys are going in, they're bidding 125 everywhere. They just want to get a ton of lead volume, but they're very flexible, but they don't want to do the rural stuff, the secondaries, the tertiary counties. And I think across the board, that third one, the people who spend the most, which I would consider that a level of success in a sense, because that means they're spending a ton on marketing generally. They're typically falling into the first camp and the third camp. So they're either buying $50 leads everywhere. They don't care where they come in. They just want cheap leads, cheap inbound leads, or they're buying that 125 lead in the top 700 counties. They still don't care what it comes in, but they want to get, more tighter CAC conversion cycle and stuff. That's what I'm seeing.
The other challenge that I have been hearing about is PPL worked so well before everybody knew about it. Right now, all the leads are getting sold, or there's not enough leads to go around, or blah, 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 blah. What are you saying? I mean, is there some truth to that? Is there, in the bucket, there's only 100 leads and, you got 200 people wanting to buy them? Like what are you seeing there? Because that is the post. Like if you look at messages about PPL on Facebook, the like 80% of them are like, yeah, it used to be good, but now it's too expensive, or now there's not enough leads to go around. So can you speak to that?
Yeah, I mean, it's funny. Like, there's two sides to it. I think the first side is that like people have perceived a drop in quality over the years for PPL, and I think part of that is like there are some other companies that have changed their strategies and stuff. I still want to get grouped into that because we focus purely on inbound. We don't do SMS. We don't do cold calling, that kind of stuff. So I can't really speak to those guys and what they're doing, but I like to think their quality is a lot better than that. So that's the first piece. The second piece is there isn't a limited number of leads in any given market. And you wouldn't want us to come supply a limited number of leads, because at some point, like, it's just going to dilute the quality. You just end up with someone who doesn't actually want to sell, doesn't actually want to do anything. You end up with some real trash. And then I would feel bad charging someone $100, $200, or something for a lead. And it's not really a lead. It doesn't really conform to the quality that we try to set. But even within that scope, speaking to exactly what you're saying, I don't see this like massive competition in certain markets that's driving prices out to the point where people can't even bid anymore. Because at the end of the day, you can bid whatever you want. You don't have to be the top bidder. You can bid 125 or 200 or whatever, even if the top bid's 400, and just wait till people hit their budget and they get leads at the end of the month. And if you do that across everybody, that's still a huge win. That's what I see.
Awesome.
At least.
Awesome. Andy, thank you so much. Do we have any coupons or any love for the audience or anybody that's watching this?
If they go to Property Leads, if they go to propertyleads.com/TTP, I can put it in the chat. They get $250 credit when they first sign up once they fund their account and stuff.
Nice.
Bam.
We got to change that little writer down at the bottom there. Okay. $250, guys. Thank you, Andy. That's awesome.
For sure.
Thank you for being on here. We'll make it a regular thing, because listen, the people are figuring out that inbound leads, as you start building your budget, is the way to go. I mean, it's absolutely the way that the big boys do it. Some people transition 100% to inbound at some point. You know what I mean? And so PPL has to be an approach that you take seriously, and a lead generation strategy that you take seriously. And if you got the budget, think, okay, if it costs $250 and it's typically 10, I would double it. I would go, okay, I need 20 of these leads. I need $5,000 set aside. But in my market, average deal size is 15,000, 20,000. I'm going to spend 5, make 15. You do that enough times, you're gonna build up a nice, heavy, healthy bank account, right? So
100%.
Andy,
And
thanks for being on here, brother.
Thanks, bro.
for sure. Thank you guys.
See you, man.
Have a good one.
Propertyleads.com/TTP, $250.
That's actual money in your pocket.
That's
guys.
that's a lead there in a major market. That's absolutely incredible. So, guys, it is that time. We've got some questions here. We'll get to that in just a second. We've got Luke Rodvold, who's going to be popping in studio here.
Ooh,
He's got an
Luke.
incredible Airbnb portfolio, credible multifamily portfolio. He wholesales probably 60 to 80 deals a year, flips probably that much. He is the master at relationships and getting the money, and does this all without any of his own money.
Yeah,
Any of his own money. He's got a money lender
legit
right now that's putting in a $500,000 backyard into his backyard, into Luke's backyard, paying for it. For Luke's own backyard. That's how good this guy is at building relationships and doing amazing things. So before we get to these questions, it is time. You know what time it is, everybody that's been joining us. It's time to be a meathead. Yeah. Raph, what was your workouts this week, bro?
I got a good one. Actually,
Okay.
I'm sticking to the workout routines, right? But one thing I did add, and I saw this somewhere, but it was a 30-30 strategy or whatever you want to call it. You wake up in the morning, take 30 grams of protein followed by 30 minutes of cardio.
Love it.
And watch the pounds melt off.
I love it.
Dude, it's actually working.
30 grams of protein,
Yeah.
30 minutes of cardio. What are you doing for cardio?
I just jump on the treadmill and I keep my heart rate at around 140 beats per.
And that's important
minute.
because I did one of those things where you put like the Darth Vader mask on and you breathe, and it literally shows you if you're burning fat or if you're burning your carbohydrates.
Yeah.
Right. Basically if you're burning your food or if you're burning fat. And it had me on the treadmill. It was like 5.2 miles per hour on a treadmill at a 1% elevation was like prime fat burning conditions.
Yeah, you may have to play a little bit with that, but like for example, for me to hit it, given my weight, my height and age and everything, if I keep it around 140, my heart rate, that's where
you track it on your wrist or something.
Just my iPad.
Your giant iPad that you're wearing.
My iPad here.
God, they're making those things so big. Guys, by the way, that's awesome, CIP Rodriguez. Put in your workout plan.
Yeah.
If you guys share it with us, we'd love to hear about it. We love fitness. I mean, it's so much better being an entrepreneur if you're in shape. I'm just telling you, like, I've been out of shape before. I've been in super shape before. When my body's feeling lean and efficient, it is bananas. And I had a hell of a workout. They did a AMRAP, as many rounds as possible. And I like, if you were to ask me top 3 exercises I hate the most, probably, well, number 1 is burpees. It's ridiculous. Knock it off. I hate that. That's the dumbest thing ever. If you guys
like
love
burpees,
it,
there's something
live
wrong
your
with it.
life.
Let me
But
just
I
say
hate that. I hate lunges. I hate walking lunges. I hate lunges holding a dumbbell. I hate lunges with a barbell. I hate lunges. I just hate lunges. I hate overhead press lunges, whatever. So I had an AMRAP of lunges, but sometimes you got to do stuff you don't like. And that's why I have a trainer that tortures me at times. I tell him I hate it, but whatever. Like lunges, the little power bike thing, the Airdyne bike, straight to deadlifts, straight to treadmill, the treadmill that you propel yourself, which is just a nightmare. It's like shaped like this. It has like slats and you have to like power it yourself. That's a nightmare for a 1/10 of a mile. To power slams with the 40-pound ball thing and going. It was a nightmare. I was like dead, and then did some abs but Monday and Thursday are more bodybuilding, push pull type of thing, upper body, and then Tuesdays is I do an hour. He was a Johnny Mac, shout out Johnny Mac with Lifetime Fitness. He was a a trainer for the G League, for the NBA and the WNBA, and so he knows how to stretch and do all that stuff. So I had sciatica before when I was younger, and it's the worst. Like nerve, I'm telling you guys, nerve damage will ruin your business because it's all you think about, and there's no relief. There's no pill you could take to really. It's just constant pain. Low back health and stretching and everything is absolutely critical in my routine. And he does that for an hour.
I have one of those inversion tables.
Oh yeah,
man, those things are wonderful.
Loosen that spine.
Yeah,
loosen that spine.
Every morning, actually, after I do the cardio session, I jump on that thing, just feel my spine just stretch. It feels so good.
Patrick's doing some serious. I work in fast twitch muscles by sprinting 3 times a week. Then I do resistance training 3 times a week for recovery. I do red light therapy and mobility stretching. Absolutely incredible. And I also go into the sauna for 25 minutes 3 times a week. So
nice.
All right, let's see what you weigh, Raph.
Bam. I was thinking about this.
Today I'm wearing the these are Allbirds. These are the Allbird shoes that are really awesome. TikTok got me with this. It was a TikTok purchase while I was in the sauna, actually. We've got the boots there.
I'm keeping it classy.
There you go. Keep it classy. Let's see. I think I don't remember what I weighed last week. I think it was like 211. Boom! Come on, man. 206.9. 206. 206.9, Raph. In your face, bro. I'm literally melting.
That is really good.
Boom. There we go.
I think.
What do you?
What we should do?
Yeah.
Those, the fat.
Yeah.
Yeah.
Just stand on it. There you go. 175. Consistent.
175.
Consistent.
So I want to get to 175 and then under 11%. That's my thing.
I love it. So he wants 175, 11% body fat?
Yeah.
Bro.
That's
I was on one of those machines and I was like, I don't know, 18%. So yeah. Awesome, guys. So go do some fitness. That's the Meathead moment. Let's answer some questions.
Remember, guys, use it or lose it.
Raphael's gonna do another giveaway here. We'll see how many darts it takes him to hit it. But let's get to some questions because we have some.
I built such a bad rep on that first.
It's all right.
That first show.
Listen, you didn't even know we were doing it. Patrick, real estate for PPL. Do you recommend a website and a dedicated phone line for inbound calls? Is there anything else you would recommend? 1,000%, Patrick. We use CallRail. CallRail has been phenomenal. Any inbound calls gets recorded, which is phenomenal for training. If you are not, and this is a tough thing, but you got to really have the mentality of like a pro athlete watching the tape after the game, after the practice, whatever. The more that you do that, the better you're going to get. You need to listen to your calls. You need to see where you're going to improve on your calls. And you need to have a business number, especially for inbound, because if you get a call coming in and you don't know if it's just a random number or somebody calling you out of the blue and you don't know that that's a prospect, it should be ringing. It should be like money time when it rings in, right? And so you got to answer those live and you got to know that it's a prospect.
Patrick, for PPL, which is paper lead, you don't necessarily need a website. I mean, because they already have a website on their back end. They're, working on that process for you and pushing it through, right? But you definitely need a phone line that catches that and it's dedicated that we can track it. So PPC, pay per click, then for that stuff, if you're doing it, yourself and all going through all that work, then you do need a website.
Yeah, because for PPL, it is you're reaching out to them. But I always like reaching out to them on a business line. And so I actually calling through, so you can call through CallRail on your phone, and it will record your outbound calls as well, which is phenomenal.
I do smartphone. My entire team has smartphone numbers.
Yep.
Everybody's assigned if they have to do everything that's related to the company with a smartphone number. Every call is recorded, everything is tracked. But yeah, you got to have that accountability there. You can also see engagement too. How many minutes they spent actually talking on the phone, how many calls came in, how many calls went out, and that sort of thing. So
awesome. Cheris Henry, I know you advocate for wholesaling as opposed to building wealth from buy and holds. I live in Trinidad and virtually wholesale in Florida. Should I continue wholesaling and paying cash? Listen, building wealth, the building wealth is buying real estate. The quick flips is your money partner in this thing. It's your ATM to go and buy the real estate and buy the assets. So I advocate wholesaling initially so that you can start replacing your income so you could be a full-time real estate entrepreneur. And it takes longer and more deals than you think. If you go back to the very beginning of the show where I break down, you're only taking home 34% of that. 34% of that check. You make 10 grand, you're taking home 3,400. 33 goes to taxes. The other 33 goes to your business expenses. 34 goes home. So you got to do a bunch of deals to be able to replace it, or bigger deals to be able to replace your current income and go full time into it. And then if you want to cherry pick deals, that's fine. I just think that it's a smart plan to build the machine first. That's going to find you the best deals, and then cherry pick the properties that you want to keep that are in really good areas for your portfolio.
For sure.
So, yeah, there you go. There you go. Or should I start to buy and hold using creative finance? Up to you. But I mean, even with creative finance, I mean, you're still going to have to put a down payment. You're still going to either have to source the deals yourself, or you're going to typically have to catch people up on their payments. And if they're in pre-foreclosure, or they're going to need some money, or the properties are going to need some money for repairs. It depends. I get it. You can do a wrap and you don't have to put money into a property, and you can sell it to somebody else. But
last year we did 86 of those deals.
Yep.
And the average amount we were spending was around $55K between catching up arrears, paying some cash to the sellers, and doing all that, and assuming the existing mortgage and all that stuff. When it was all said and done, and making the property look decent for a rental and that sort of thing, we were in on average around $55K.
Well, I just look at it, right, Ramp, and you're like, okay, for a buy and hold,
yeah,
the cash flow goes back into the property.
Yeah.
So people don't understand the cash flow should go back into the property. So you can't replace your income. You're building wealth for sure. But if you want to keep what are you paying your bills with?
Yeah.
What are you living off of? If it's a job, or you've done really well with investing, great. Fantastic. You want to keep your job? Great. I'm just speaking to the people that want to be true entrepreneurs. They don't want to work for anybody else. They want to have a great lifestyle and have the front row seat to the best assets that you can buy. And you can always cherry pick the creative deals from somebody else if you want, but 55,000 on average is what you're putting down. So
yeah, we ended
what
up
are you going to do?
We ended up wholesaling a bunch of them to fund even some of those deals and stuff.
Yeah,
so we did keep a bunch of them, but again, yeah, there was money that was going in there. It wasn't all just
well. And that's then you have to raise funds.
Yeah,
you have to raise funds for the down payment, for the fix-ups and all that, and that's why we've got Luke Rodvold coming in here in just a bit.
$5 says he's coming in without sleeves.
$5 says he comes in with a fanny pack. Yeah.
Oh yeah.
Yeah. Luke is wild, dude. He's all tatted up. He's got he usually wears a tank top or sleeveless shirt and short shorts and a fanny pack. And he raises a tremendous amount of money. Yeah. It's hilarious. It's hilarious. Next. Jose, hey Brent, what list do you recommend to go after if I'm cold calling? I'm in Palm Springs, California area. Vacant land, vacant lots in your area. Driving for dollars for sure. The AI list from Flip Finder for sure, without a doubt. That should get you enough. You know what I mean? But definitely driving for dollars. Definitely driving for dollars in California. Pretty much all of California, especially Palm Springs. But you gotta find the ugliest properties and be obsessed with them and do everything that you can to get a hold of them. If you can't get a hold of them on the phone, then send out some mailers.
You've talked about getting obsessed over the 1,000 worst looking properties in your area. I think that's one of the best strategies that anybody can roll out, especially starting off. So so find them and then just smother them with.
Sip Rodriguez, no. Three calls is to get you through. So it actually rings.
Yeah.
So it's not call 2 times, but no, call 3 times to get in, to get through these.
He's calling 2, 3 feet from gold.
Yeah, that's it. BC, well, what list do you recommend in Ohio, in Cincinnati? Tired landlords. Let me explain something about those market. It's a landlord market. It's a cash flow market. And I would say half to 80% of landlords do the old agreement. Don't call me if anything fixes, if you need anything fixed, if anything breaks, tenant, and I won't raise your rent every year. Deal? And then the properties get totally destroyed. So tired landlords for sure, driving for dollars, AI list, all those things. But tired landlords in that market for sure. And I would go after multifamily tired landlords as well, without a doubt. Yeah.
Ohio is interesting.
Yep. Awesome. It's a giveaway time. Giveaway time.
Do it.
Giveaway time.
We need to get some graphics, Matt. We need to get all sorts of things for these giveaways. We need to take this show to the next level. We've got too many important people watching this. All right, guys. Now, again, top shelf. Well, we already gave away the Trapper Keeper. I've got plenty more Trapper Keepers to give away. But the black is the hoodie and the white is the TTP shirt. Hoodies or shirts? Hoodies or shirts? They want either. Yeah, just stay focused. I'm not even going to watch. I'm going to just look at this. Almost. Almost.
That's scary.
Dude.
Guys, give him some encouragement in the chat. He's going double. He's going double digits here. He's getting real close.
Your spacing's good.
He's close. You're real close, Raph.
Can I throw them all at once?
I wouldn't throw them all at once. I would take your time. There it is.
Didn't doubt me for a second.
All right, first time.
I did so good last week.
That was awesome, guys. Look at this background. Matt
you-
made this. I love
That's
this.
really
This
good.
is I love this
That is
background.
really
This is
good.
awesome, guys. This is a 20-foot by 10-foot LED screen that sits behind us that we can put anything on, and we love it. Matt does a great job.
I do gotta say, Brent,
yeah.
I love the trust that you have in me to not move from your seat while I'm swinging those things
right over
behind
me.
your head.
Yeah,
Yes.
that was pretty cool.
Yes.
Maybe that's what threw
That's
you off.
blind
I didn't
faith.
realize I was in the line.
I just didn't want to murder you.
line of
on
fire
on
here.
Live.
A asks,
Yeah,
what
yeah.
wholesale strategies would you recommend for a competitive and expensive markets like the Bay Area? Again, this is how I would review all of this. Okay. And this is what we do, guys. If you're interested in joining the Rhino tribe, wholesalinginc.com, but this is something that we do, with everybody that comes in and goes through a custom blueprint, because it's all different, right? Everybody's different based on 4 main factors. And you see 3 of them here. Are you part-time or are you full-time? Schedule matters. Okay. Do you have money for marketing, or do you not have money for marketing? And are you new or experienced? And really new and experienced, yes, a little bit has to do with real estate, but more like, how is your communication levels? How is your ability to have to be versatile with different personality styles? And typically that's people that come from a sales background. If you have experience there, then it opens up your green areas here. But really what you're looking at for you specifically, in your market is if you just depending on if you have a full-time or part-time, but I think PPL is a really strong approach. I would probably do outskirts and try to figure out some areas that aren't like, the most expensive areas in the Bay Area, and kind of play around with that. Maybe it's more Oakland than it is San Francisco, or definitely you got to do your direct mail. Direct mail to the ugliest properties. You don't have to spend a tremendous amount, but I would be very sniper with your direct mail and set that up to send out to each property every 6 weeks. Build up your referral database. You got to go in. There's a video that I have, and we'll post it. Hunter, will you post the video of me showing people how to go into Facebook request, and then post every single day? You got to post every single day, guys. I buy houses. I buy houses every single day to your stories. And you will be shocked with how much money you can raise, how many opportunities you're going to find, how many people you would have never thought would reach out to you and give you a shot at buying properties. You got to figure out if you're going to be proactive with cold calls or text message marketing, right?
As you're posting to I buy houses, make sure that you're building your buyers list at the same time, building those networks
for sure,
those connections
for sure. And then from there, if you have a budget to hire a VA to do those for you, for the text and the calls, that's certainly an option. But if you don't, keep it really tight with your budget and don't go over your skis with spending too much. And that's what I would do. I would just follow this blueprint right here in your market and just base it around those things. But again, in your area, having people call you to sell their house is going to be expensive. PPL is going to be expensive in the better areas of the Bay Area.
I mean, it sounds archaic, I know, but don't sleep on door knocking. I mean,
I'm
telling you,
there you go.
We're doing really good. We're working deals right now in San Diego, and a couple of those, higher end areas. Just they're door knocking leads.
How else are you going to get a hold of them?
Yeah.
These people have these block any incoming calls they don't know unless you call them 3 times in a row type of thing. You got to scrub whenever you're calling or texting. You got to scrub on the do not call list. And so what are you going to do? You get out to the door, you knock on the door, and you get a hold of them. That's what you do. But there's your real estate investing lead generation blueprints there. All right. That's awesome. Christopher in the house. I've been doing the stories every day for 2 months and it's definitely helped me. That's it. I'm telling you, every single day post, I buy houses, and then say, DM me. Yeah. You got to have a call to action. Don't just put, call me. I mean, don't just put, I buy houses and then it's a humble brag or something. Yeah. You know what I mean? Make it a call to action for people so that they'll reach out to you. But definitely check out that video. It's posted under me here on YouTube after the show. We've got Luke Rodvold coming in. I don't know where he's at. He should be here anytime. So we'll get him in here and rocking and rolling with that. But it's crazy. So the kids take something called Iowa tests, and they're like standardized tests around the country to just see where they rank with all the different things. Right. And so Bo goes to this private school, St. Francis, and we get these test scores, and it's like, okay, this is horrible. Spelling 11th percentile, reading 14th, math 35th. And then I look back and look down, and there's this real long one, and it's social studies. And social studies is made of history and economics. So his economics score was off the charts. Which is basically like a financial literacy, right?
IQ, yeah.
And I haven't been, and you've done a great job with your kids, really teaching them, really bringing them around the business. But Bo's a little young. There he is. Oh, you called it. He got $5. Oh, we both got it.
$10.
Oh, $10. Hold on, Luke. We'll introduce you in just a second. But Bo, no, you're good. But Bo got off the charts on his economics Iowa scores.
That's awesome,
and
dude.
Terrible in everything else. So, but I mean, you do a great job of teaching the financial literacy. I kind of go through it. I'm not really into really doing the, we kind of talk about assets and liabilities.
Bro,
and
I tax my kids and everything
and all those things. But beyond that, we don't do a tremendous amount. It's just in him. He's just got it. So, Luke, before you got here, Raphael bet me $5 that you're going to come in sleeveless, and I bet him $5 that you're going to be wearing a fanny pack. So come on in. So we're even, I guess. Come on in, Luke.
Yeah.
Welcome to the show.
Come
on. You don't? No. Yeah, you do. What is that? Oh, that's your shirt. Oh, my bad. Oh, hey, waiting already. Hey, can I get my more sleeves? All right, Luke Rodvold. So listen, we've got, you're in the hot seat. Pull that microphone over to you. Let's get all three of us in here on the camera here, Matt. Luke,
What's happening?
how many doors are in your portfolio?
Right now it's 42.
Okay.
But we're finally getting started on the 32 unit.
Right.
So soon to be 74.
Awesome. How many of those are Airbnb? How many are multi? All that.
1, 2, 3, 4, 5, 6, 7, 8. And then we're about to launch 2 in Flagstaff.
Yep.
So 10 will be Airbnb. And then the remaining 64 will be multifamily.
Awesome.
Yeah.
And so how many flips and how many wholesales per year?
So obviously when things kind of turned in 2022,
Yeah.
we got smoked.
Yeah.
So just being, super honest, we got smoked. We lost a lot of money.
How much money?
Probably around $1 million. We added it all up. Probably about $1 million.
Yeah.
Which will be nice for taxes. It's going to be great. But no, so we were able to bounce back though by selling some of our rental properties.
Right.
So that was really fortunate I'm happy that we did buy those when we did, a lot of them, so we toned it down from flipping as much because we got hit so hard. you know? Right now we're starting to kind of climb back up again. We're doing about 15 at a time. We got up to about 25 at a time.
Right.
So I'd say yearly right now, we're probably doing about, I would say this year we probably do 60 flips.
Yep.
And we'll probably do about 60 wholesales.
Awesome.
We're about 50. We're about 50-50 right now.
What do you typically make on a wholesale?
About 30.
Nice.
Yeah.
Flip?
I mean, if you were to average it out, probably 50.
30.
Yeah. Probably 50,
32.
50, 55.
Nice.
Yeah. Because when we have some, we just did one in Flag. We just ripped 145.
Awesome.
And then we had another one in Apache Junction that we just did that will make 12.
Right.
You know what I mean? So
Yeah.
You have a very particular way of setting up your Airbnbs too. Like all your Airbnbs are theme based.
Absolutely.
They're not like your typical, house. Where,
Yeah.
okay, it's a nice couch, it's a nice kitchen. No, bro, you go all out. Like
We-
you get
yeah.
you get stuff shipped from like Europe and like
Yeah.
go all out.
We
on-
learned,
yeah.
because we had some Airbnbs when we very first got started. And it's all trial and error. It's like anything, right?
Yeah.
So it's all trial and error. So we did a couple, and it was when it wasn't as competitive in the short-term market. So we did a couple. We didn't make them crazy, but they were still nice.
Yep.
And they did well at first. But then what ended up happening was as you got more competition, and as we added more Airbnbs to the marketplace that we started kind of doing crazy stuff on, we actually started noticing that those ones that weren't like crazy, those ones started slowing down a lot. And then I knew a lot of people, in Scottsdale and in, Mesa, Chandler, and then also up north too, that had Airbnbs. And you start talking to them about how theirs are doing. And same thing, theirs were not doing well if they weren't just dialed,
Themed.
if they weren't just decked out.
Yeah.
So, if they're not decked out anymore, I don't believe you're going to do super well.
Right.
And the reason being is Airbnb have made it a point that they're going to be switching over to more of a experience based kind of, stay. So they're going to push off of a couple of different things. They push off of obviously reviews, if you're a super host, stuff like that. But they'll push yours to the top. Like if you go to Prescott Airbnb right now and you just put in a random date for like 3 days, we'll have probably 4 of the top 8 will be featured on
because they're experiences. And guys, if you're wondering, if you're looking to get into Airbnb,
a lot of work.
definitely follow Luke's Instagram, because you post a lot of you post a tremendous amount of stories and posts on there just showing what you mean by having a theme, because it truly is an experience staying at one of your places.
Yeah, for sure. And we just launched a YouTube page. It's called Flippin' Fortunes.
Yep.
So it's pretty cool. It's all about our flipping, and then it's all about Airbnbs and stuff like that too. So
awesome.
It's pretty dope.
Well, I wanted to bring you on here for one specific reason, something that I think is your superpower.
Okay.
And you're incredible at design. You're incredible at coming up with these experiences for your portfolio. You've been really smart about building your portfolio in great areas. That's all great.
Yeah.
But I think it's raising funds.
Okay.
I think raising funds is your true superpower. I think
Okay.
that that's the thing that really sets you apart.
Yeah.
Because you're doing a lot. You're doing most, if not all, these projects.
Yeah.
Without your own money.
Yeah. Absolutely. Well, I mean, that's the thing is like, you can, when we were starting to do a couple flips at a time, it's not as big of a deal to maybe, fund it. Right. And I'm not saying like buy it outright, but I'm saying to put a hard money loan on it, to come up with the 20% down, to maybe come up with, if you're not experienced, 20 to 30% down for the renovation. Sometimes, you have to fund the entire renovation. So by the time we started really scaling and we're like, okay, we've got 10 flips going on right now. You start talking about 10 flips going on and you need 20, 25% down to purchase all of them. And you need 20% into renovations and stuff, it adds up quickly. And so we're like, this isn't going to be realistic. We're not going to be able to scale heavily if we're going to be, the thing is that, you can do well, but at the same time, you got to have just perfect example is, let's just say 10 properties. If it's 10 properties, you're sitting at 60 grand per house.
Yeah.
So, you gotta have 600 grand spare, just like, oh yeah, let me throw this into 10 properties real quick. And so, that's aside from rental properties, from other things, from regular living. And so it makes it difficult. So yes, we started getting loud and saying, hey, this is what we're doing. We offer crazy returns, which is why a lot of our investors that.
So talk about that.
that
What are the crazy returns and what's the paperwork?
Like,
Yeah. So we offer people 12% on their money.
Yep.
Annualized. And then we also offer 1% of the purchase price. So
Sales price.
Yeah. So if we're in and out of a project in, let's say 3 months, and let's say that the loan is on whatever, say we're doing gap funding, say it's on 80 grand. If it's on 80 grand, we're going to give $800 a month because 12% annualized, you got to divide it by 12. So $800 a month times 3 months, right? So that's going to be 2,400. And then 2,400, say we bought the property for 400 grand. 400 grand, you're getting another 1 point of, of purchase. So that's another 4,000. So you've got someone making $6,400 on their 80 grand in 3 months. So if you're annualizing that, which everyone does with us, and they're like, hey, keep my money, do another one, keep my money, do another one. If you do that 4 times, then you're looking at,
I know, I did it like 30 times.
You told me you were making too much money.
No, but that's,
I know. Yeah. So that's what I mean. So
that's how you do it. You go 12%, but when people are starting out, they're typically like doing profit splits.
Right,
they're like 50-50 with
right.
the people. They're doing that. So is it because you have experience? Is it because you guys, you showed them like a product? Did you start there, or is that just where you evolved after you have a resume? Started with
a couple lenders. Nothing crazy. We started with smaller properties, maybe $200,000, $300,000 purchase prices. So then you kind of work your way up, but we'd start with 1 or 2 investors that were like, hey, we'll do 30 grand or 40 grand or 50 grand. And then again, we've been doing it for 5 years now. And so it's all, the more you prove yourself to those investors. And, we multiple investors that we have, of our normal ones, they went from 50 to 100 to 200 to 400 to 600 of what they're saying, take my money because I can't get returns like this anywhere else.
So where do you find these people? Are you just hanging around country clubs? Obviously you came from a wealthy family and it must be all these wealthy connections.
Yeah, absolutely not. Absolutely not.
So how do you find people?
Social media.
Really?
Literally social media. Or, you can talk to family members.
What do you mean?
So, get loud, post what you're actually doing. That's the thing. The thing is, a lot of people are really scared to post what they're doing. They're like, oh, what if people think that I'm whatever? Or what if they judge me? It's like, who fucking cares?
Block them.
Absolutely no. So it's like, just post what you're doing. And then you're going to get hate. Of course you're going to get hate.
Yeah.
I had a post that I posted literally yesterday, and someone went on there and said like something along the lines of, well, the only reason that you're that is because you're supposedly the best cold caller.
Yeah.
And I was like, oh, so it's all luck, right? Has nothing to do with anything, just luck. I was turned into the great cold caller by luck. So
in the last 10 years of grinding,
right?
It just happened.
That's what I'm saying. So you get that stuff. You know what I mean? So it's like, but who cares? Brush it off your shoulder. Who cares?
Yeah.
So just getting loud, telling people what you're doing, telling people about the returns, prove it. Showing the returns, talking to other people and saying like, hey, if you want to, see what you think about it, go speak with this lender or this investor who did invest with us and tell them what you think. You know what I mean?
Yep. Paperwork wise, do they put liens on it? Do they?
Yeah, we'll
is there
do-
like an agreement that you have
we
with them?
we literally just do it's a contract. It's handwritten though. I mean, it's nothing crazy. It just says, so and so will lend this amount of, however much to Viking Real Estate, paid at 12%, per month, annualized. 1% of purchase price, goes back to them.
Mhm.
And then we do we'll put like not a memorandum, but what's the word for it against the home? Not
Yeah, like a
but-
lien.
Yeah, basically.
Yeah.
You
So,
record it.
then-
Yeah.
Yeah, we record it. So I mean, and again, that's only if an investor wants us to do that. 80% of our
I don't think we ever did.
I was going to say 80% of our people are just like,
Probably
no,
should,
we
but-
trust you. But
Yeah.
so I mean, but that's the thing though. When you've been doing it for 5 years, when you really get to know people,
Yeah.
you know what I mean. They're like
Yeah.
they're not too worried about it.
Yeah, but because you have some big time like wealthy people that back you now. They found you on social media?
No. I mean, usually most people know a couple people that have some money too. Like
Yeah.
most people, you know what I mean?
So you go and you say, "Hey, listen, this is what we're doing. This is the returns that we'll give
And
you."
they're going to say, prove yourself first.
Yeah.
Like everyone, and no one's, I should say this, like you're not super smart if you're just going to say, if someone just throws money at you and they don't have any idea what you're doing. And,
Right.
you know what I mean?
Yeah.
But it's like, some of the biggest people that will back us. I mean, they also just like know us as people and they're
Mhm.
like solid, they're like, you guys are solid people. You guys are going to take care of business. You
Yeah.
know? And even if we didn't, which we shouldn't, we've been told we shouldn't do, but we guarantee it too. So it's
Right.
like, you know what I mean?
Yeah.
So yeah.
So what about buy and holds? Because that's really the wealth building.
Burr, baby.
Okay.
Burr. I know
Oh,
a lot
yeah?
of people, that follow your channel probably do creative stuff.
I think most of them just go out and find some deals, to be honest.
If you're a deal finder, then burring properties is the golden ticket. I don't care what anyone says.
Yeah.
That is how we have added all of our rental properties is by burring.
Uh-huh.
We just did one where we're adding, 4 units, and we will burr into it, and we will be walking into 400,000 of equity, and we will spend none of our own dollars. We'll put a long-term loan on it, and we will pull out 200 grand.
Right.
So it's like
Tax free, baby.
tax free. So I
Yeah.
mean, burring is it's insane. I mean, if you're not doing burrs and you're a deal finder, because again, if you're a deal finder, you should have access to being able to buy rental properties like this. The thing is too, is that, if you're just getting started and you don't have a great, track record of, maybe let's just say income, right? Let's just say that you've been doing this and for 6 months or a year and a half, and you don't have the 2 years of proven income. Go do a DSCR loan, which is debt service coverage ratio.
Yep.
So they basically look at each property as an investment. They look at it as a business. So they don't look at you as a whole. I mean, they still will, but they don't look at it like, can you prove to me that you're making enough money to qualify for this loan?
Right.
What they're going to do is they're going to look at the property. They're going to say, what is this property going to rent for? And then they're going to say, okay, well, if we throw a loan on this property, your rent's going to, or, your payment's going to be $2,000, but we'll run a whatever it's called. I think it's like a W. There's a certain form
Whatever.
that tells you exactly what the,
Yeah.
So they look up what the rental rates are. And if they say, okay, your payment's going to be 2,000, but you can rent this out for 3,000, they're going to be like, yeah, let's do it.
Yeah.
So,
Yeah.
I mean, and that's, and DSCR, they're going to be a little bit higher interest rate.
Yep.
But they're not going to make you jump through hoops to try to get loans. So that's majority of my loans are in DSCR loans as well.
Higher
And they
interest,
don't go
right?
against your
That's
Fannie
what you
Freddie.
burr into.
They don't go against
Yeah.
your Fannie Freddie 10 loans. So you can load them up
Yeah.
Nice.
Love it. As
Yeah.
many as you want.
as many
Do you
as
just
want.
find a bank that you like and go with them?
No, I found a lender. Yeah. I found a DSCR lender. I've got some DSCR lenders if anybody's interested in Arizona. I don't know if they'll do some stuff in other states too.
Who manages your properties?
I manage the long term. When I say manage, I mean I collect my cash rent every month.
Yeah.
So I make all my tenants pay cash. So I feel
Seriously?
like a slumlord at the end of the month.
Do you?
Oh yeah.
What?
Oh yeah.
You literally go to their properties
Yeah.
and you're just
Once a
like,
month. I'm
dressed like
I'm
this?
that guy. Yeah. Oh yeah.
you make them give you cash?
Yeah.
Why?
Because I love it.
What?
Oh,
there you go.
me personally, it's weird. It's a weird thing. If I have cash on me, I won't spend it.
Right.
If I have cash, I just won't spend it. So like when I collect it in cash,
Yeah.
shit's going away.
Yeah.
Never to be seen again.
Yeah.
If it goes to my card or something like that, Sage gets a hold of it.
Yeah.
You
So
know?
yeah, the kids get it. Yeah. So
So I like cash, and also it's
so the cash flow on the properties,
yeah.
you don't live off.
Oh,
that.
so sorry. I manage long term.
Yeah.
My wife Sage manages
Yeah.
the short term.
Yeah. You guys
So-
live off of it?
We could.
Do you?
Yeah, and actually we probably do, because all the money that we take from income just goes straight back into properties.
That's yeah.
I've actually looked at it before,
Uh-huh.
like of like what we bring in, rental wise versus like, just like income. And I'm not even lying when I say this. I think we probably spend 90% of our income
Yeah.
on houses.
Right.
Like literally just we don't do lavish vacations. We don't do any of that. I like cars, but I mean like nothing crazy.
Yeah.
But I mean like our money goes right back into houses. Like the second that we refi or, refi out of properties, or if we get like a good flip that closes, I'm like, where's my next property? Where's my next
Sure.
burr?
Yeah.
So
Love it.
That's
But what I'm talking about, and something that we were talking about, is the fallacy that you can just live off of cash flow,
yeah.
and the fact that it goes right back into the properties.
Yeah.
Goes into vacancy, it goes into repairs, it goes
Yeah.
into updating, it goes into major events, it goes into
For sure. Yeah. I mean, the one that
turnovers.
we try to renovate our properties immediately, like
Right.
nice the first time.
Sure.
So I mean, like, obviously years are going to go by and then you're still going to have to, take care of stuff.
Mm-hmm.
But I mean, like if you renovate them solid, the first time, like we don't have a ton of issues.
Turnover.
We don't have a ton of turnover either, because you got to be very, particular with where you buy. Again,
Yes.
I only buy properties. Like the only places I will buy is in areas that I like.
Yes.
I've had many rental opportunities come up in like West Valley and stuff like that. I'm just not interested. I don't want it.
Right.
I don't want the tenants there. Like I like downtown Chandler. I like downtown Gilbert, and I like Prescott, Sedona, Flagstaff. Like those are my areas.
Yeah.
And it's like, because those are my areas, I know that any other property that we come across will be a wholesale.
Yep.
And then if there's things in those areas, which the cool thing is because of social media, we've kind of become known as the people to send stuff to, properties to up north.
Mm-hmm.
So, I mean, from social media, the amount of people that that send us stuff now up north is absurd. Like we don't even need to run marketing up there anymore.
They like your
All right. It's outside right now.
Is it?
Yeah. It's out there.
How many cars do you have? Because you are bananas with it, but you kind of have a connection with cars.
I have 4.
Right. You have 4 cars, but you have family members that find cars.
I have an uncle who's he's a mechanic.
Right.
Yeah.
Yeah, but he flips them. You flipped with him.
Well, that's what I did before real estate.
Right.
I helped him flip cars.
Right.
Flipped cars before houses.
Well, and you also slang drinks at the resort.
Absolutely. Cabana boy.
Seriously.
Yeah, no, it's right.
I mean, you could see it. He's a cabana boy turned
started as a food runner.
Yep.
To server to bartender, and then so on.
And now you're developing.
Yeah.
And you've got partners that will pay for all of that.
Mm-hmm.
Do you then get loans for the rest of it? Bank loans to develop?
Correct. Yeah.
You're 32 or whatever.
They'll get bank loans. Yep, exactly. So just you work out with your partners on those, however much they feel comfortable putting down.
Did you finish that Sedona deal?
It's almost done. It's like a week out.
The 10 unit or
yeah. It's like probably like a
bro.
week out
That
right
was
now.
like 2021.
Awesome.
2 years. That one was 2 years.
You got it in 22?
I swear, yeah.
Yeah,
That one's
22.
2 years. The Prescott, the 32
No, I
year
know.
has been. We have, that's a crazy thing is like you start learning about all this. We have had no holdups. We've been 3 years through engineering, through engineering and through permitting through the city.
Yeah.
And so like we are, maybe 3 years and 3 months or so into that property, and we are just now about to break ground on the dirt work. It's crazy.
insane.
How much cash flow before you're like, I'm done with the day to day. I'm done with the flips.
Yeah.
I'm done with the wholesale. Just got the portfolio.
I don't know if I will be done with that stuff though, because it's passion.
Yeah.
Like that's what's made it amazing is that what I do now, dude, I don't feel like I work a day in my life.
Right.
You know, that's why I dress like this. I don't. I've got an appointment after this. I'm going like this.
To buy a house?
Yeah.
With a property owner.
Yep. Yeah.
Yeah.
Yep.
Is it? And by the way, guys, if you've ever seen or heard some of Luke's call recordings I mean, we started out making calls.
Yeah.
We started out literally making calls every single day, going back and forth. What's working? What's the script? How did you develop it? What words work? You know, for years.
Absolutely.
And then we were splitting deals for a while.
Yeah.
And then you went out and started your own company and with Jake and have done phenomenal things. You guys are a real staple in the East Valley. You've got your office there, which is like a frat house, essentially. It's like
similar, yeah.
Yeah.
It's a lot of fun.
Yeah.
We have a good time in there.
And you guys literally have the best time. Nobody has a better time than you guys.
No. I mean, we've been blessed enough to, do well enough to where we can truly just do stuff that we love.
Yeah.
I mean, again, we go up to Prescott once a week, check on the projects. We've got a membership there in the country club. So we'll golf up there when we're up in town now. And this Flagstaff duplex that we just took on, Sage and I are doing it. It's going to be 2 Airbnbs. It's right by the train station. So we're going to make it like, it's going to be decked out like a train station. It's got a red metal roof.
Yeah.
Like we're going all out on it again.
Awesome.
And it's fun though. Cause the thing is like when you start doing stuff like that, and especially if you pick areas that you love, you can go stay at them. And it's like, we'll go up to Flagstaff now and it's an Airbnb. So it's like, just block it off for a weekend or a week or whatever it is in the summertime.
Yep.
Go stay there. It's right downtown.
Yep.
I mean, it's 3 minutes from the lumberyard.
Yeah. Love it.
You know what I mean? It's got a guest house. So we're going to do a big fence between. It'll be 2 separate Airbnbs again. Probably, my guess, it'll probably bring in $13,000 a month.
Awesome.
It'll probably be 7 and 6 or something like that. Maybe 12. So maybe 6 and whatever, 7 and 5 or something. So,
and what do you have into it?
I got it for $250. And we'll be $120 into it. So
nice.
$370 into it, I think.
Yeah, look at the cash on cash on that one.
It'll be worth
absolutely incredible.
So it'll be $370 into it. It'll probably be worth $700.
How many employees did you start out with, and how many do you have now?
It was just cold calling, like you said. Just that was how we started. So none.
Yeah,
none. Just
how many property owners do you think you talked to in your life?
Oh God, I don't even know. I mean,
100,000.
I don't know. I'd have to do the math to truly like break it down.
50,000.
What does that come out to like per day, per year?
I don't know.
I don't know either.
Some wild number.
Well, when did you start?
9 years.
When did you start with us? 9 years.
Yeah.
So in less than 10 years, you have how many rentals?
Right now, 42.
Right. What's the total gross rent for your short term?
I don't know the total. I know the amount for mine and Sage's that are separate from Viking.
Okay.
Because obviously, half or so of those are with Viking with me,
with
me
partners
and
and
Jake.
everything. Yeah.
And then obviously the rest are me and Sage. But Sage and mine, bring in the Airbnbs do about 23,000 per month right now. And then it's another 14. So we're right at probably right around 40 grand comes in per month.
Awesome.
Yeah.
In rents.
Yeah. Not cash flow, but rents. Yeah.
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 Are you going to pay off those as fast as possible?
No, I'm going to pay off my primary.
Yeah.
The new one. That's the plan is pay
Yep.
off that primary and then leave the, no, because I'm going to keep
leave the leveraging.
I'm going to keep leveraging so I can just continue getting more. Because I mean, as we all know, real estate has done what, over the past thousands of years. It goes up on average. I think it's like 3% or 4% per year. So no, I'm just going to keep sitting on them.
If you go back and look at decade
on all of them,
decade over decade, I mean, we have fluctuations between the decade, but decade over decade, it's always increasing. So.
Yeah. So I mean, it's like even the ones that we bought,
I would pay them off.
Even the ones we bought,
I would pay them off as quick as possible. I would take all the cash flow, pay them off.
Even the ones that we bought 6 years ago.
Because at some point, bro, you think that the rents are going to stop. There's going to be a massive downturn at some point, and your rents are going to stop.
Yeah.
I'm just telling you, bro.
I hear you.
I'm telling you.
I hear you.
It's gonna happen.
The rents won't stop, but they would come down.
Well, yeah, to not cover your payments.
Yeah, no, I hear you.
Yeah.
So I don't know. There's two different ways you can go. I know some people that are next level successful that leverage. I know some people that are next level successful that just pay everything off.
Yeah.
So it's like, it just,
You got two sides of the coin here.
I think it's personal preference, but I'm not opposed to what you're saying.
Yeah.
Because at the same time, it's the exact same thing.
Because you'd have more cash flow.
What if you've got 40 properties that are fully paid off? It's like, yeah, then your cash flow truly is 40 grand.
That's what I'm saying.
Like, yeah. No, I know.
I heard Doug Hopkins has 150 paid off. All he does is buy them and pays them off. You know what I mean?
Yeah, yeah.
150 grand a month in rental payments, all paid off.
That's insane.
Just saying.
That's insane.
Us old guys.
No, I hear you.
Have seen when the just one.
Oh, trust me, I get
one
it. I get
bad
you.
market.
Yeah, yeah. 100%.
Kills everybody.
I get you.
And too smart to do that. So pay them off. Anyway,
I saw a question on there that said if I had pad split. I do not. I think it's a lot of work. This is my personal opinion. I think it's a lot of work, and I've heard horror stories from people that I know that have pad split already. One guy that I know just from my gym was telling me, he's like, I did my first pad split. He's like, you want to hear a story? I'm like, yes, I do. And he goes, so I split it into 6 rooms. They don't, I guess pad split does all the, they do the, whatever, the background checks, all that, whatever. So he had all of it set up. All of the units were rented out. One guy started doing drugs in one of the rooms. He started freaking out. He accused one of the other guys next door of stealing something from him, pulled a gun out, told him he was going to kill him. Cops got called. All 6 tenants left, and now he's sitting with a property that's weirdly set up, 6 bedrooms, and he's got no income.
Yeah.
I'm like, yeah, no, I'm okay.
Yeah.
I'm okay.
Sure. Well, I think it's a good strategy.
I'm not trying to talk
in particular things,
talk trash on pad split, but it's just not for me. That's all.
Yeah. Awesome.
Yeah.
I like how you have your you have a lot of clarity over the like this is my area, this is my strategy, this is what I focus on. I do this with Airbnbs, and I know that, and I'm sticking to that.
Yeah.
I mean, I think that's a lot of the key to the success that you've had, and I've seen you over the last 5 years, man. Just you know,
I think like when you stick with what you know, it's hard to go wrong. You know what I mean? Like, I mean, I've had other business opportunities come up where it's like, do I want to put my time towards that? And don't get me wrong, we've also done other business ventures, and they haven't worked out because it's like, it takes you away from what you know. It's just not what I'm passionate about.
Yeah.
So stuff like that. And so it's like, I've had that conversation with Sage where it's like, I don't think I want to invest in anything else. I don't think I want to spread my wings into further different things. It's like, if we just stay the path that we're at right now, doing exactly what we're doing in the markets that we like and enjoying that, like this has been after, 9 years now, but obviously we all know how it goes. I mean, it's like this, and then it can go up, So, I mean, it's like, I feel like if we just stay the course, it's for the next 10 years again.
Yep.
Be 45 and who knows where we're at for 40, in 10 years. So I don't know. I just like sticking with what I know now.
Awesome.
Yeah.
When do you think is the appropriate time to start adding to your portfolio? Because you wholesaled for a while.
I did it earlier than I would have.
Yeah.
Looking back at it.
Yeah.
I think that I think we added rental properties earlier than we should have because again, it's one of those things there's positives and negatives again. The reason that we were able to make it through 2022 was because we had those rental properties. So I'm happy that we bought them.
Sure.
But then at the same time, we were buying rental properties and dropping down to $0 in the bank account regularly because we were buying those. And so we would have been able to scale our business a lot faster had we not purchased those. You know what I mean? Had we sunk that into systems and people and the right things like that, I think we would have been a lot further.
Yep.
But again, it's you live and you learn and I don't know if there's necessarily a right answer to that. I think everyone's different and it depends on what your goal is, your ultimate goal. But I mean, like, I would say realistically, if you've got a business that's running fairly smooth, even if that means it's just you, and maybe you've got, you've got it to where you can kind of, okay, I've got whatever it is, 10, 20 grand a month coming in per month, or even if it's nothing crazy, like 10. And it's like, if you can live off of 40 grand per year or something, and you're like, hey, I've got an extra 50 grand or 60 grand and I can burr a property, why would you not try it?
Yeah.
Like maybe worst case scenario is you got to sink 20 into it because you went over on your rehab or the appraisal didn't come back as you wanted it to.
Mhm.
But I mean, it's like if you just add a rental property to your portfolio and you only had to come out of pocket 20 grand or something like that, you know what I mean? Now you've got 60 grand in the bank or 80 grand in the bank, but now you also have a rental property that has 20%, 25% leverage on it.
Yep.
Yeah. So I mean, I would say as soon as possible, just when you're comfortable though.
Yeah.
Not if you're scratching and clawing for deals right now. You know what I mean?
Yeah. Do you run across any creative deals? You taking over any sub twos? Do you do any of that stuff?
Yeah, we have. Not super familiar with it, but we added a triplex in Prescott.
That's sub two?
Yeah.
Yeah.
Yeah. Or it's a seller carry.
Oh, okay. So not a sub two.
Yeah, yeah.
You haven't bought any sub twos. Would you buy a sub two?
I'd be open to it. Yeah.
Yeah.
I just don't know a lot about. I'm being honest. Again, it's one of those things where it's not my wheelhouse.
Yeah.
So I don't really know a ton about it. So
Yeah.
because I don't know a ton about it, it's hard for me to get too, deep into the
Yeah, but you
details.
talk to a lot of people. You're not running across these things?
No, not
Me
very
neither.
often. No,
Not at all.
no. Yeah.
Just don't.
Yeah.
I mean, I think most of the ones that I see are in less desirable areas.
No question about it. Yeah, for sure.
Not always. There's some that people have picked up, but
I think you guys are right about that though.
Yeah.
Like we're doing a good number of those.
yeah,
And yeah, I mean, it's just, B, minus at best, you know what I mean?
Yeah,
So,
yeah, for sure.
yeah, they're hard to find. It's the exception, not the norm, to find them in.
Yeah, and I
in,
think because
better
like,
areas, like
because it's
downtown
not
areas and stuff,
because
so.
it's not really the areas we focus a lot on. That's probably why we don't come across them a lot.
yeah.
We had one in Chandler. I'm sorry, it was in Mesa. And the guy we were trying to figure it out where we were gonna, he was gonna do. I don't even remember. He had a 2.5% interest rate on it, so we were just gonna take it over, and go for it. And then he was like, or you can just pay me, like it was like $5,000 over what I owe. And we're just like, we're like, because we looked at both ways. We're like, we could just put keep his loan in place and move forward with it. I was like, I don't want to deal with it. Let's just give him $5,000 and the property's ours now.
Yeah.
So I don't know.
Love it. Awesome. Raising funds, being loud,
Yeah.
building up your endurance on the phones, building up your communication with
Yeah.
property owners.
That was my post yesterday was about consistency.
Yeah.
Or it was either yesterday. Yeah, it was yesterday. Yeah, it was about consistency. Because I mean, I feel like I have a lot of people that reach out. They're like, man, I just don't know why. I can't get over that hump. And I'm like, oh, okay. Well, like, how long you been doing it for? Man, I've been doing this for 3 months. And it's like, what hump? You got a lot of fucking mountains coming. You don't have a hump. I mean, that's just honesty,
Yeah.
And it's like, yeah, but it's like, I'm calling for 2 hours a day right now, Monday through Friday. And it's like what makes you think that's going to be enough? Like,
Yeah.
you can make a whatever income out of it, but it's like, it's not going to be doing it for 3 months and calling 1 to 2 hours a day. Like, that's not going to get it done. Because at that point, you're not treating it as a real job. Like if this is people that are truly trying to make it their, their job, you can't treat it.
You would call all day.
Oh yeah.
You were playing Madden at the same
for
time.
sure. But I mean,
Video
I'd call 6 hours a day regular. Like
Off the bat,
4
bro.
days a week.
Off the bat.
And so it's like,
Yep.
You're still doing it.
you have to. I don't cold
you?
call nearly as much now.
Yeah.
I'm doing all of our inbound PPC now.
Nice.
Yeah, inbound PPC.
See the
and
transition again?
PPL. Yeah.
PPL through who?
I don't know.
Oh,
I guess
that's right.
Jake knows, but so yes, I'm doing a majority of that now. But again, we had handed a lot of it off to our team because I saw it said how many people are on your team now. Now we have me and my business partner Jake. We have an MLS guy that just does straight MLS. We have
MLS offers for listed
right,
properties,
exactly.
right?
Yeah, so literally putting offers in on MLS, and we have a project manager that saved our ass.
Mhm.
Oh my god!
Mhm.
When we started really like scaling, we didn't have that in place. It was me and Jake doing everything.
Yeah.
And so so now we've got him, and he's taken. He was the smartest hire for that position that we've ever done before.
Yep.
And then we have obviously a TC, and then we have a traditional side. We have the Viking team is our traditional side. So we've got
Realtors.
yeah.
Yeah.
Yes, we've got 5 agents or so that are just, they'll do. We have 2 of them that we'll just do our inbound follow-up for like long-term like leads that have been in the system.
Yeah.
And then we just have obviously other traditional agents as well.
Awesome. Luke, you're the man. What's your Instagram?
Luke_RO_.
Nice.
Yeah.
Luke_RO_. What was the new YouTube channel?
Flippin' Fortunes. Go check it out.
Flippin' Fortunes.
Flippin' Fortunes. It's awesome. You guys are gonna love it. It's a lot of it's very raw. Like it's very raw. Which is
you don't say.
Yeah. So I mean it's a lot of like, you know, in the car, like just like it's more of like a blog, honestly. It's like each episode right now is like a 10 to 15 minute blog. But it's crushing right now. We've got 5,000 subscribers in a month.
Mm-hmm.
So it's doing well. So
awesome.
Fun.
That's awesome.
Flippin' Fortunes.
Flippin' Fortunes.
Guys, check it out. Subscribe.
Flippin'
Get
Fortunes.
into Luke's life. He is absolutely incredible.
Yeah,
And that wraps up our show. So congratulations to you and all your success. Let's bring it all. Put it to the middle camera, Matt. Alejandro, bring it in. Switch me to the little lapel, please. Huh? There we go. All right, guys, go out and find a deal this week. It's only Wednesday. We've got so much time. If you look at it, we've got 120 hours each week, even if you have a full-time job. Obviously, there's sleep and there's rest and that type of thing, but we have more time than we realize.
On behalf of Luke and Matt and Alejandra and Luke and Raphael, remember, keep your house clean, protect your health, and increase your value to the world, and you'll live an incredible life. We'll see you next week. Love you guys. Bye.
Love it.